Mic check. Mic check. Mic check. There we go. There we go. That's a lot better. Let me know if music too loud as well. Maybe I should turn it down a little bit. Okay, I think that might be a little bit too low, not gonna lie. We can leave it like that, bro. Um Actually, let's turn it down a little bit more. Oh wait, y'all might hear an echo. Turn that off real quick. There we go. There we go. That should be good on the music, bro. Thanks for the light, Kyler Jones. Welcome to the stream, bro. I started paper trading, but I'm still confused on why the charts are so still. Well, the charts are so still right now. It's probably because it's low volume. Yeah. If the price action is slow, it's because it's low volume and whatever that pair you're trading. This is the trade we caught yesterday. Where'd it go? Nobody deleted it, right? So let's put it back up on the fucking chart because I didn't mean to delete it. It was back. It was back here. Where'd it go again? Oh, you just had it. Yeah, this was yesterday's trade. And that's 100 bucks we caught. Um, let's clear our rest of our chart breakdowns and start all over fresh. So let's clear GA, clear AU, let's clear GU as well. Let's clear EU. Our EU trade idea played out yesterday from by the budget area. Got a break and retest continuation. These played out pretty good. Clear that though. Gold went on without us. GJ. This level failed to hold on GJ. And the USD pretty slow. GPCHF pretty slow. Oh, we had a break retest of this area. This area actually held. So that actually played out. This break retest actually played out as well. We got 30. We still at this break retest area that we had marked up from yesterday. And UJ, we did a breakdown on USD CAD too for somebody in the chat. I see how that played out. We were looking at sales in this area. I think it was sales. Yeah, it was sales in this area. If the 5-minute could give you a market structure shift. So it gave you one here for potential entry. This trade ended up losing though. All right, let's start off with US 30. Not US 30. NAS 100. NAS 100 on the daily time frame overall. We are bullish at all-time highs. It's pretty clear. Let's change our candlestick colors a little bit. Make it a little bit lighter. Yeah, that's a little bit better. When you first started trading, was the charts extremely confusing at first? Yes, it was. It's like learning a new language. But now that I'm well seasoned in the trading industry, it's a lot easier for me now. The other time frame overall bullish, we're making a new high. Looking at the 4-hour time frame, we're overall bullish as well. We make a new high as price came up to take out this high right over here. 4 hours bullish, 1 hour is bullish as well. Now I just want to see price give me a pullback into this area for a continuation. Let's change the color of this. This looks disgusting. Let's make blue. Can we get a better blue? Okay, we can do this one here. Okay. Save as SR. No, I just saved it as SR. Save as SR. Enter. Save. Yes. Okay, there we go. So based off of a NAS 100, I wouldn't. That's a good blue. Yeah, I like this blue as well. I really won't want to buy NAS 100 until we get a pullback back to the area for a trend continuation. That's what I want to see on NAS 100. Very clear. Looking on the 4-hour time frame, I really wouldn't want to sell until our 4 hour goes bearish. And that doesn't happen until price can come down and take this low. So we can look to take sales below this low down here. If price can break and close below this low, where we took our trade at yesterday, and you can take some sales down here. Other than that, I really just like buys. So let's make this the same grade as the other grade. That's NAS 100. Look at GA, daily time frame, overall bearish. How do I know we're bearish? Price came down here, took this low, made a new low. 4 hour time frame, we're bullish with potential to go bearish below this low. Or we might be going bullish above this high. Kind of tricky. This is a tricky range to trade. I want to mark up the high and the low of this range. Not gonna lie. So let's make these gray. Let's go to the 1 hour time frame. Yes, I don't want to trade in this overall range. I need price to break out of this range for me to trade this. Actually, this range that is currently in looks disgusting to trade. You can mark up the high and the low of the range and wait for price to break out in either direction. If you break below this range, we can look to target these lows down here for sales. If you break above the range, we can look to target these highs up here. Or will stocks crash now that Trump made Indians illegal? I don't know, bro. I don't pay attention to the fundamentals of trading. I trade based off of pure technical analysis, not fundamental analysis. Look at AU. Daily time frame, overall bullish. How do I know? We made a new high above these previous highs. Go to the 4 hour time frame. Overall bearish. How do I know? We made a new low once price came down to take out this low. Then on our 1 hour time frame, we're overall bullish above this high with potential to go bearish. So I want to see our 1 hour go bearish below this lows alongside our overall 4 hour time frame being bearish and look to take the breakout sells as price falls below this level of support. Looking left, we have clean range to fill to the left hand side to target these lows all the way down here. As far as buys, I really wouldn't want to buy. I really wouldn't want to buy until our 4 hour shift bullish. I think our 4 hour could go bullish short term, possibly above these highs over here as price come down to make these equal lows. So this could be a potential trade idea for the buy side. And looking at buys above this area, you can look to target this level right over here or this level all the way up here. And this is a really nice blue. That's how I think about AU. Look at GU. Daily time frame. Okay, what is the song in my ear right now? Looking on a daily time frame, we're overall bullish. How do I know? Price made a new high above these highs to the left hand side. On our 4 hour time frame, overall bearish. How do I know? We made a new low below this low to the left hand side. Looking at our 1 hour time frame, we're overall bearish with potential to go bullish. See if we can reject these highs up here for continuation down. If not, if price breaks above these highs all the way up here, look at this on a 4 hour. I really wouldn't want to take that either. I like this level a lot better. All right, so we can see if price can reject off of this area, then continue lower to back down to these lows down here. being 1 hour is bearish. Looking at the 1 hour time frame, I see a lower low down here and price pull back into a fib level for a trend continuation down to the downside. Also, if you want to look at this bullish internal structure with this higher high, higher low, higher high, higher low, higher high, you can look to go bearish below these lows as price is approaching right now. You can go bearish below these lows and look to target these lows down here. Very simple. So I do like sales here on GU. This looks pretty clean. We're going to add this to the favorites and put it up top. This is our favorite pair so far. Oh my God, I know him, y'all. Oh my God, what's up, DJ? Other than that, let's continue. Look at gold. See what gold got to offer. Looking at gold, we're overall bullish on a daily time frame. Prices making new highs above these previous highs, looking left to current price. Look at the 4-hour time frame now. 4-hour time frame is bullish as well, making new highs above these highs. Again, at a 1-hour time frame, we are still bullish. So ideally, I would want to take more buys than sells because I have more time frame telling us to buy rather than telling us to sell. Very self-explanatory. So now it's about finding the areas that we want to actually buy at. This is our current high up here. If we could give us a break and a pullback back into this current high, we could look to price to make a new high. If we get a confirmation breakout and a retracement pullback into this level. Other than that, looking on the 1-hour time frame, I really wouldn't want to buy into price pullback all the way down here, which is very, very far away from current price. Back down here and the trend continuation to the upside because price never goes straight up forever. If price was to go straight up forever, that means anybody can get on any chart, buy at any random given point in time, and see some profit, and which is unrealistic. So, knowing that the market moves in higher highs and higher lows patterns, we want to wait for a higher low to form. As you know, this is an aggressive move with no real retracement to balance out this bullish market. So if we can get a pullback down here into this 3,700 area, we can look to take some buys potentially to come back up to retest this high if we don't re-break this high that we currently have sitting here. Let's continue on to GJ. Looking at GJ on the daily time frame, overall bullish, making highs above this price to the left hand side. Look on the 4-hour time frame, we're bearish, making lows below these lows here. On the 1-hour time frame, we're bearish, making lows below these lows here. This is just a report back of overall bearish market. The 1 hour does go bullish above this high here though. Just keep that in mind. So we can either sell off of a same level retracement up here. So we're breaking off this dip for a trend continuation down. But again, price is definitely struggling inside this area where we're making equal highs and equal lows on both sides of the markets, right? Price is struggling to break these highs up here and struggling to break these lows. So I don't want to trade inside this chop. Instead, I would rather price make a breakout of these previous lows to the left hand side, which would be these lows all the way down here, and then look for a trend continuation to fill the rest of this range. I just don't want to participate in this shop because this price doesn't have a clear decision in this area. Like it does not make any highs, not making any lows. It's just giving sideways price section. So I'd rather not even trade in that. If you can get those below this previous low to the left hand side, we can look to target these lows all the way down here to fill in the rest of this range. California Breeze, take you out to E. Okay, got a big no. So this looked good. As far as buys, I really wouldn't want to buy till 4 hour goes bullish. That doesn't happen until price comes all the way over here and break this high over here because this is the highest point price was before making a new low below this low here. Other than that, strictly looking for sales. Don't want to sell where price is currently at. So I'll look to take them down here. Let's continue on to NZD USD. Looking on the daily time frame, overall bullish above these highs. Looking on the 4 hour time frame, we're bearish below these lows. Looking on the 1 hour time frame, we are bearish as well. Actually, we're bullish above this high here, and we go bearish again if we come down to reclaim these lows here. So our 4 hours bearish, our 1 hour bearish, we really want to sell overall. We can look to sell if price can break below these lows and have a trend continuation to the downside. and look to fill in the rest of this range down here. But we do have to keep in mind of this level right over here. So that's what I think about NZDUSD. As far as buys on the buy side in 4 hour time frame, hey, you can look to buy above this level here in the 4 hour because we have equal lows, lower high, give you a break and retest at this 4 hour time frame, where our 1 hour giving you a break and retest as well at the same exact area. So, and looking on the buy side, you can look to target these highs here, or you wouldn't have a further target, look to target this previous level all the way up here, or even this level here. That's what I think about NZDUSD. GBP Let's look at it. Looking at GBP on our daily time frame, overall bearish, making new lows below this low. Looking on our 4 hour time frame, overall bearish, making new lows below this low. On our 1 hour time frame, overall bearish, making new lows below this low. All right. So I really want to sell rather than buy. This is our current low on the 1 hour time frame. So if we can break this current low, we can look to take some sales. Other than that, if you take those lows, we can look at target the bottom of this range here. Based off where price is currently at, we can see if we can get a decent size pullback. Again, this is all chop. We really don't want to trade off with this pullback, but you can see a pullback into this fib level for potential trade. But again, I really don't want to trade inside this kind of price action. This price action is choppy as fuck. And so this range has wicks to the upside and downside consistently all in this area. So I don't want to participate in this kind of price action. Other than that, looking on the 4 hour time frame, it potentially have some buys if price can come up here and take this high on a 4 hour time frame. That's where we go bullish. And as far as the 1 hour time frame, you can take some counter trend buys above here, which is back into this price action. So I really wouldn't take that either. Because I wouldn't want to take it, I'm just going to put it off my screen and just look at the bottom up here. This is the high quality setup above here rather than taking it up here. So that's what I think. What broker do I use? I use CoinX. Let's look at EJ. Looking at EJ on the daily time frame, overall bullish above these highs here. Looking at 4 hour time frame, overall bullish above this high here. Now 1 hour time frame, overall bullish above this high here. Actually, I would do this high here instead. So looking at the 1 hour time frame, we're rejecting these previous highs. Look to the left hand side right over here. This is our previous high sitting right over here. We look for price to retest this area and the continuation to the upside as far as buy. So we are going to retest now. We might have it actually set up on this. So we're going to add this to the top of our watch list as well. As far as sales, I wouldn't want to sell until the 4 hour goes bearish. And that doesn't happen until price come down to take out this low, where the sellers will regain control. And it will look something like this. For sales, other than that, I'm strictly looking for buys. On a 1 hour time frame, we could take the buys here, or if we don't get an entry here, we could take the buys here to continue higher. Let's look to the left for previous price section to see if we can find some levels to target. So our levels to target is not until the 4 hour time frame all the way back a whole year ago. The last time price was up to was in 2024. We can look to target these highs all the way up here. As far as the buy side. So I would like to see the 5-minute structure. Looking at the 5-minute time frame, we did take this lower. The 5-minute decided to go bearish. Looking at this bearish structure, we have a lower low, lower high, lower low. Technically, this is my most recent lower high before price made a new low below this low here. So a 5-minute goes bullish above this area. I really wouldn't want to buy this high because I'll be buying right into this level, which makes no sense. I would rather see price come up, make a lower high, give me a new low as we re-break this low, and then I'll use this line, trail it from here to here. This will be my new most recent lower high structure. We'll look to take buys above this area, stop loss below this overall low. Then we can look to target these highs over here to the left hand side for our first target and have a further target all the way up here. If we don't get either of these entries, we can look to take it above here and have to wait for the same kind of setup to happen up here and get a trend continuation back to targeting these highs. This GBP let's look at US 30. Looking at US 30, we're bullish on a daily time frame above this high here. We're bullish on the 4-hour time frame above this high here. We are bullish on the 1-hour time frame, again above the same exact high. All right, so every time frame is bullish, I would rather take buys. This is our current high or the current area price is rejecting off of. If we can break and close above this area, we can look to take them trend continuations to continue higher. Other than that, for buys, we can look for price to pull back into this area down here versus the area we previously broke above. If we'll pull back into this direction, then a continuation higher. Or we can look for a fib level pullback actually. From the lowest point to the highest point, we can look to take them buys down here off of a fib level rejection. Either one of these pretty much plays out for me. Let's actually make this a fib level. I'll label this bullish fib and stay to the left and right. Let's look at USD JPY. Daily time frame, overall bearish below this lows down here. We made a new low, but it's overall consolidating. Then on our 4-hour time frame, we're bullish above this high. 1-hour time frame, bearish below this low. So it's too much chop, right? We got daily bullet bearish, 4-hour bullish, 1-hour bearish, like it's too much indecision. Rather not even trade that. So we're going to clear the chart and not even look at that at all. But so far, we like GU for sells. We like EJ for buys. This is too far away from current price, too far away from current price, too far away from current price. I skipped EU. Okay, we can do EU. But let's continue first. Go too far away from current price. GJ too far away from current price. And then USD. Kind of far away from current price, but it's notable to watch. GPCHF too far away from current price. US 30, notable to watch. And yeah, so we're going to favor US 30 and the USD at both of these up here. And let's do the EU breakdown. Looking on the daily time frame, overall bullish as long as price stay above this area where we made a new high here. On the 4-hour time frame, overall bullish with the same high. Looking on our 1-hour time frame, we are bearish. Actually, we are bullish on 1-hour time frame. We just went bearish as price came up to take out this lower high. Having a lower low, lower high, lower low, lower high, lower low. We shift bullish above this area. In this area, we have a higher high, higher low, and a new higher high. Our 1-hour time frame is bullish alongside our 4-hour and our daily already being bullish. So we could possibly look to take some bullish continuation or some buys. Price just broke above this previous high. Looking to the left-hand side right over here. Let's label this support and resistance. Price had this current high up here. We could look to take a trade if we get a rejection in this area for buys. And if we don't get an entry here, we can look for entry here for buys. We can look to target these highs right over here, or a further target, which would be these highs all the way up here. And I do like this as well, so let's add this to the favorites and add this to the top. Now we got to re-rank them. So we do like GU for sales. That is still going to be my number one. EU for buys, EJ for buys. I think EU and EJ is tied. They both look relatively the same. So we got clear price action, break and retest to the upside on EJ, and this looks just like EU. Clear price action looking to the left hand side, break and retest for continuation. So these look the same. So we don't really need to look at US 30 anymore. We don't need to really look at NZD/USD. So we're gonna focus on these three for tonight. You want to do AUD JPY? I got you, bro. AUD JPY. Let's look at it. Let's look at it. Let's look at it. Daily time frame on AU overall bullish. How do I know? We made a new high as price came up to break above this previous top to the left hand side. Daily time frame is bullish. Looking on the 4-hour time frame, I want to say we're bearish. We created some equal highs over here. Inside these equal highs, we had this higher low that eventually got taken out, and price took out this low as well. So we want to say bearish on the 4-hour time frame. Looking at the 4-hour bearish structure, we have a lower low, a lower high, a lower low, a lower high, and a new lower low. Clearly bearish. Go to the 1-hour time frame. See if we're bearish or bullish. 1-hour time frame is bearish as well. Again, price created a higher high right over here. Price took out this low after making that high high, giving us bearish structure where we have a lower low, lower high, lower low, lower high, lower low. So 1-hour time frame is bearish. 4-hour time frame is bearish. I would rather take sells opposed to buys, just because we simply have more time for telling us to sell opposed to time frames telling us to buy. Makes more sense to sell. We have our current low, which would be these lows sitting right down here where price is currently projecting off of, where you can look to take a trend continuation to the downside if price could break below this 97.250 area. And look to the left to see price previously rejected this area here as well. So this is a strong level. We can close below this level, give us a pullback or a retest, then continue lower. We can look to target these lows down here, but this is the next lowest point that before price gave us a big reaction off of. Other than that, if you want to wait, if price starts to pull back, you want to be a little bit more aggressive. You can wait for price to pull back into a fib level, which is getting rejected right over here off of this 0.50, and look to take some sells here where we have a bearish fib. And you can look to take these sells. Based off of these sells up here, you would simply wait for a 5-minute market, 5-minute time frame to have structure. As you can see, we have a higher high breaking above this high to the left hand side here, a higher low. You would just simply wait for price to create a new higher high and then take out the most recent higher low, which would be this low here. I personally wouldn't take this low as a sell, but I really wouldn't want to sell right into this level for price to potentially reject this area to reverse on you and taking a loss. Instead, it makes more sense to trade below this area instead, where you have a bigger range to trade, looking to the left all the way where we target, I was targeting before. Other than that, if price creates a new high after making this high, then you can get a better entry up here based off of this higher low instead of this higher low. Then this makes it a better quality trade because you have now a bigger range to fill. You'll stop loss above these highs over here for about 7 pips stop loss, then have about a 11 pip TP2, and then you can look scaling below here or have a runner position all the way down here to these lows. That's what I think about AUD JPY. But overall, selling at off of this 1 hour fib level, or if we re-break the current lows. What do you think about NZD/USD, brother? I just did NZD/USD. I'll go re-go over there again for you. Where did I put it at? Okay, NZD/USD right over here. I'm in long on that. So you in long with NZD/USD. Daily time frame is overall bearish. Bullish. How do I know? Price made a new high above this high, but we decided to go bullish. Have a higher high, a higher low, and a higher high. So we are bullish on the daily time frame specifically. Look at the 4-hour time frame now. 4-hour time frame, I would say, is bearish. How do I know? Price made a new high above this high over here. This was the lowest point price went before making that new high all the way up here. Now, as you can see, price eventually you have a big sell-off that took out this low, where we switched into bearish momentum, where sellers are regaining control on this 4-hour time frame. Then at the 1-hour time frame, we are bullish here with the potential to go bearish. Technically, the 1 hour is bullish. How do I know? Price gave us a lower low, a lower high, a lower low, a lower high, a lower low. Then we took out this high that price created, making us a new high on the 1 hour time frame. We're having now a higher high, which all the way up here, and no new higher low. Okay, so this is technically the lowest point price was before making that new high all the way up here. So we are bullish on the 1 hour time frame. If this level of support down here could hold, your buys could play out. But ideally, I personally wouldn't trade in this range. For me, I really wouldn't take a trade until we break below this area for sales, because our 4-hour direction is bearish. So I would anticipate the 4-hour momentum to continue. But as far as buys, I really wouldn't buy until price closes above 0.58700. Above this area is where the 4-hour shift bullish. As you can see, the 4-hour is making equal lows. This would be the most recent lower high before creating these equal lows. Let you know that the 4-hour on the 4-hour time frame specifically, buyers regain control above this high here. But based off of your area, I guess you're trying to buy at this level of support. Anticipating this level of support will hold. If you're a supply and demand trader, you're looking at this level as a level of demand. If you're a fair value gap trader, you're looking at this level as a fair value gap, right? But this fair value gap would be getting inverted at this point. But ideally, all of them looks very similar. But in my case, I trade support resistance, so it'll be this level of support. But your buys could play out. I just personally wouldn't be trading inside this kind of price action, because this is overall consolidation, right? Price filled this range, gave us the retest, filled the range again. So now you're anticipating that this level could hold and continue. But in reality, you're buying a bearish market on the 4-hour time frame. With the 1 hour at almost, it's like a 90 something percent. It's like a 98% retracement. Like the start of the move was down here. We measure this pullback from this push up to this down here. This is probably like a 98 or 95% pullback of this overall push up. That's a steep ass retracement. I really wouldn't want to be buying this retracement that was that deep. That's me personally. Of course, stick to your own analysis, because you learn off of your own trades. You don't really learn off of other people's trades unless you're trade similar to them. But you get better when it comes to learning when you looking at your own trades, because you could pick where you did right and what you did wrong and sample size. AUD cat, I got you, brother. AUD cat. I'm stuck at the daily time frame. What's good, Hearts? Welcome to the stream, bro. Looking at AUD cat, we're overall bullish. How do I know? We made a new high above these highs over here. We have an aggressive high up here. This is just a retracement phase of an overall bullish trend on a daily time frame. Looking at the 4-hour time frame. 4-hour time frame, I want to say bearish. Yeah, we're bearish. We created some relatively equal highs here. We took out this low right over here, and we took out this low right over here, where we decided to go bearish. 4-hour time frame. So looking at the 4-hour being bearish, let's continue on to the 1-hour time frame. 1-hour time frame is it's kind of tricky. I want to look at this high here. We also made equal lows down here. We took out this high here where we decided to go bullish. And we have a higher high, higher low, higher high, higher low, higher high. Technically, we are bullish on the 1-hour time frame until price takes this low. So because the 1-hour is bullish and our 4-hour is bearish, I really wouldn't want to trade this. I would either wait for the 1-hour to go bearish alongside the 4-hour already being bearish, or I'll wait for the 4-hour to go bullish alongside the 1-hour already being bullish. So understanding that our 4-hour doesn't go bullish until price breaks above this previous lower high right over here. Looking at it at lower low, lower high, lower low, lower high, and aggressive low. You have no real lower highs in this area outside of this one, because this was just a straight melt, straight sell off. So I wouldn't want to buy until price comes all the way up here. As far as sells, the 1-hour time frame goes bearish below this level here. You can look to take some sells below this area, but I already want to take these sells either, just because you will be selling right into these lows here. I mean, in this range to trade is a little too tight for me personally. I would just look at this like a 1-hour shifting bearish here, but I really wouldn't look to trade it until price comes down here below this low. Below this low, you can look to the left-hand side targets. You can target this previous level of support here, or you can look to target these levels all the way down here, or even this level right over here. I think this would be the higher quality trade. You could take this trade, but it's a little bit lower quality to me. And same thing with these buys. Like you could have buys here on a 1-hour time frame at the scalp, anticipating that these buyers will continue and you'll be trading the 4-hour retracement. But this is a lower quality trade just because it is counter trend to the higher time frames. If this trade does work out, not saying that it can't or it won't, you can look to target these highs here. But me personally, I wouldn't take this. I will only take this trade or the one all the way up here. But that's what I think about AUD CAD. How much did you make over this today? I haven't traded today yet. I'm just coming to the chart. Been here for about 30 minutes. I haven't taken a trade yet. But wouldn't that hourly breaker candle sell off? I don't trade breaker candles, so I'm not going to tell you yes or no to that question because I want to give you false information. I don't trade that. I trade major key levels like support resistance off of previous highs and previous lows of pure market structure. So, I if we have a level that's right below it, I wouldn't trade it unless it's clean range. Like looking above these highs here, you see price have a clean range to fill. Meaning it's a lot of imbalance here. Price has to fill this. Based off of below this low here, this area doesn't have to get filled because it already got filled with all these wicks. So pretty below here is like not a necessity for price to fill this. Not really clean. It's choppy price action. I really wouldn't want to trade inside that choppy price action. I think a breaker candle is a level of demand. In this case, the demand would be this level down here. But I don't trade that. So and looking below this level here, again, you have ranges to fill here. Are you having an aggressive push up? You're looking for price to fill in the rest of this push. And even down here, right, we have an aggressive push up that has no real retracement. You will look to see if price can fill the rest of this with targets. So it makes more sense to sell below these areas rather than to sell prematurely in this area, which is a lower quality trade. Not saying that sales below this area won't work out or can't work out. It's just lower quality. What's price action? Price action just means higher highs and higher lows. That's it, really. So a market is never going to go straight up or straight down. It's going to move in what we call waves or higher highs and higher lows. As buyers are in control, you will see a series of higher highs, which look something like this. Not going to always look this clean. When sellers are in control, you will see what a bearish market, which will look something like this, which lets you know that sellers are in control. In order for a bullish market to shift bearish, the most recent high, the previous higher low has to get broken, which would be this pivot point here, for sellers to regain control. And as far as buyers regaining control in a bearish market, the most recent lower high needs to get broken, which would be this pivot point here. So if price was to break above this area, this will let you know that buyers are regaining control. If price was to break below this area, just let you know that sellers are regaining control. And that's price action in a nutshell. To show you a chart reference, as you can see, price was bullish here. Let me know that buyers were regaining control. Well, buyers had control over this market. As you can see, price failed to make a new high, eventually came down and took out the most recent low before making a new high, as price broke above this high here. And once you see price take this low, that confirmed that sellers were regaining control. Then you can simply just look at the selling pressure or the selling levels, which would be these lower lows and lower highs, letting you know that sellers are regaining control. So this is the most recent highest point price made before making a new low. Looking at this new low that got broke right over here. So if price breaks above this area, that lets you know that buyers regain control above this area on a 1 hour time frame specifically. That's what I think about AUD CAD though. So when sales take control, is that when to buy? No. When sales take control, you will want to take sales because you want to go in the direction that the overall market is already heading. You don't want to try to go against the masses. Like if you were swimming in the ocean, would you want to, or you surfing, would you want to surf against the wave to potentially get swallowed up by them, or go in the direction that the waves are already going, pushing you towards shore? It would be a lot easier to surf with the waves rather than going against them. If the market is already selling, it doesn't make sense to try to buy that market. You will want to take sells alongside the market already showing you that sellers are in control. And vice versa for buys. If buyers are in control, doesn't make sense to try to sell a market that is overall gaining strength, just because the market is overall telling you that buyers are in control. So you want to be on the long side, the overall bullish momentum. Thanks for the roses, Water family. Thanks for the ice cream 97517X, whatever. I don't know what to call you, bro. I'm gonna call you X. Thanks for the ice cream, though, bro. Thanks for the gifts. And so far on GBP USD, we're still waiting for sales. We haven't got a strong hourly closure below this level yet, so we're waiting for hourly closure below this level first. And then we're gonna go to the 5 minute time frame to see if we can find an entry. But first, we need the hourly closure. Looking at Euro USD, we haven't quite reached our area yet. Came close, but didn't quite get there. So we're just waiting for this area to get tapped into before we get to the 5 minute chart. Looking at EJ, looking at our 5 minute chart, we haven't made a significant lower high yet. So until we get a lower high and a new low, we may not have an entry if it continues down. And so can you predict or have a good idea that the market will go up to place my trading? I know how to predict the area that market will go to place my trading. I'm not going to speak for you. I'm just here to showcase what I do and how I approach the financial markets. This is in no way, shape, or form financial advice. Of course, do your own research. I am not a financial advisor or an accountant. So I'm just here to showcase what I'm doing with the way I trade, and it's up to you to follow what I do or not. I'm not responsible for your potential gains or losses that you do take trading the way I trade. So I'm going to add that disclaimer. Or do I just place it when it goes up already? No. Don't want to place it when it goes up already. You want to be precise. Because if you just place the buy when it goes up and it starts to go back down, you're going to be losing money. Place a sell when the market is going down, expecting it to continue down, and it starts to go back up, making a retracement, you're going to be losing money. So it's about buying at certain areas of price and identifying patterns that price previously made and anticipating that pattern will continue. So it's a little bit more advanced than just buying when it's going up and selling when it's going down, because you got to combine that direction with precision. We got an hourly closure here in the next 18 minutes. So until then, we got no trades on GU. Still waiting on EJ and GJ. So we might be here for a while. Might be here for about 2 hours. It's cold as fuck. Yo, what? Oh, so that's what short means? You're selling because the market is going down? Yes. So short positions are just means you're in a selling position, and long positions just mean you're in the buying position. This trade yesterday was some fire, bro. Who was here yesterday that remember when I called these buys at this level? By the way, is Robinhood any good by your experience? Robinhood is good because it's very beginner friendly. So I would say yeah, Robinhood is good. It's very beginner friendly. So yeah. Ooh. If you're in the YouTube chat, you want to see my face camera, listen to the music that I'm listening to. You see me shaking my head. Pull up to the TikTok live, bro. If you're in the TikTok live and you want to see YouTube videos or past broadcasts from my previous live streams, because I save all my past broadcasts on YouTube. But that way, if anybody on TikTok wants to rewatch them or whatever the case may be, you just go on over to the YouTube, bro. Same name as my TikTok name, Traderholic FX. But yeah, Robinhood is good. It's beginner friendly, so it's easy to navigate. About thanks for the follow, bro. Welcome to the stream, bro. Let me know. For all the people that don't know me, what do y'all trade and how do y'all trade? Like, do y'all trade? Are y'all scalpers? Are y'all day traders? Are y'all intraday traders? Are y'all any swing traders in the chat? Any supply and demand traders or fair value gap traders? Any indicator traders? Any footprint chart traders? Like, I'm just curious on how everybody else trade. I think the most of the people that I get in my chat are people that trade like ICT style, like with liquidity grabs and fair value gaps and things of that nature. Swing and scalp trader, bro. Nice. How long have you been trading? Why? Props to you, man. You have a lot of patience, especially when the market is consolidating. Yep. Patience protect profits. That's the motto I like to go by. I need to see, before I take a trade, I need to see everything happen step by step. I need to see a clear direction first. I need to see my levels, which is clear. I need to wait for price to reach my levels. Then I need to wait for my entry criteria to all get checked off in order in the 5.5 structure. Wait for the structure to shift on the 5-minute time frame at that level. Then give me entry. Then place stop loss. Things of that nature. I need everything. See everything happen in order. If it doesn't happen in order, then I just won't take a trade. No point in chasing trades. I'll let the trade come to me naturally. That way, I'm not really fixated on the results of the trade because it doesn't really matter to me if it comes to me or not. If I miss out on the trade, there will be other opportunities that presents itself. So there's no point chasing any kind of setup. So I'm very patient. I like to say patience protect profits. I'd rather be patient and miss out on the trade than to be not patient and take a trade just to lose. So no trade is better than a losing trade any day. I like your logo though. Production, your logo kind of fire, bro. Yeah, that logo looks fire, bro. I was going to scalp Nas 24760. Your thoughts? You was going to scalp buys from this area, or you was going to scalp sells from this area? 760 from down here. Going to take buys from here. I wouldn't do that, but it's completely up to you. Off of what time frame would you basing that decision off of? I'm curious on what time frame would you thinking about that showed you that buys in this area would be a good idea. Just trying to get an understanding of what you saw in that moment to think about it. Yeah, this is good for EU to come up. Now I just need a price to re-break this low. But until you re-break this low, we're not gonna. If it goes up without me, I'm okay with that. I was looking at buys off of this area, but until we reclaim this low, if it goes up without me, I'm cool. I'm definitely okay with that. Looking at EU, yeah, same thing here. I need price to re-break this low first. If he re-break this low, I can look to take buys above this area and the stop loss below this low and look to target these highs here. If it continues up without me from where it's currently at and just continues to go higher, I'm okay with missing out that setup. NQ loans until 25.024. Good NQ. Until 25.024. So until these highs up here, that could play out. It's overall consolidating though, so based off of adding a position right now, I don't recommend. You said the 1 minute time frame, so 1 minute time frame at 24.760. Let's make a line at 760. So you wanted to long down here. Looking at based off of just market structure, price went bearish here. Looking at this bear structure, we have clear lower lows and lower highs forming here on this 5 minute. Yeah, you could have got some longs down here in the 1 minute time frame, but I wouldn't have entered right over here. I would have waited to price. I would have entered back here. I would have waited for price to take this lower high. This would have been my entry after we got a 1 minute quarter above. Stop loss would have been below these overall lows down here. Then I would look to target the highs, which would have been these highs up here. So this would have been my trade. This is how I trade. So I wouldn't got the 760 area, like that wick entry here. My entry would have been a little bit different on a 1 minute time frame based off of this market structure shift. But based off of where price is currently at and the higher time frame structure, I would not buy. Not 100. Not yet. I need to see a retracement first. Back into this 24,640 area before I look to take a buy. But I see what you were getting at with the buys at around that 760 area. But that's not something that I would have took though, to be honest. My long off of 24977 at NQ, TP at 25024. Belonged at 24977. What time frame were you looking at? Were you entered? 24977. So you're relatively at entry. I see a little bit in profit. So you got a long down here on one of these wicks. You're a little bit in profit, and you're targeting these wicks up here. So you got one of these wick entries. 5 minute. 977. So that was back over here somewhere. Yeah, you got some good longs. You got a good entry. Price took this high on the 5 minute time frame as well. As long as we respect these lows down here, you should be good. Yeah, so long as we respect these lows, we should be good. If we take these lows, most likely we're going to come all the way down to these previous highs to the left hand side here, giving you a retracement or probably a fib level rejection. Yeah, so this is where I want to buy at. Off of this fib level rejection, that also lines up with previous highs. But I do see what you're thinking there in the 5 minute chart. But if that's something that I would have taken, no. But I could see it playing out. Thanks for being my liquidity this last few months. Just got a house. Well, I'm not your liquidity, buddy. But that was cute. Keep up the hard work, bro. I don't understand trading. And what is it that you don't understand? Are you completely brand new, or have you been trading for a little bit and you just can't get it to click for you? Completely brand new? I got a video for you, bro. Not my video, but I recommend all new traders watch it because it's simple to understand. And it gives you a detailed, a beginner-friendly video to understand what actually going on. Go on YouTube, type in FX Alex G Ultimate Beginner's Guide to Forex. Watch the 4-hour long video. The video is about 4 hours, and it will teach you everything beginner-friendly when it comes to trading. It will teach you what is trading. Wait, before I even talk about this video, inside this whole entire video, you will learn everything you learn in this video is universal to all markets, not just Forex. So the stuff you learn in this video will cross correlate to options, futures, stocks, and crypto, like all the financial markets. The stuff you learn in this video will correlate to that. Inside this beginner's video, it will teach you what is trading, Forex trading specifically. It will teach you what is trading view. Trading view just means where you go to mark up your charts. Going to tell you how to draw in charts. That means like using these arrow tools and these line tools and things like that, like over here. Going to go over that. Going to go over position size calculator, show you how to manage risk per position or how to calculate your risk. Going to teach you Forex Factory or show you where to go to view economic news. He's going to show you where MetaTrader 4 and MetaTrader 5 is. This part is really not needed because nobody uses that anymore. It's very outdated. Most people use TradeLocker or TradeOvate nowadays for personal brokerages in their web terminal. But MetaTrader 4 and MetaTrader 5 ideally is just what's used to actually execute your trades after you make a deposit, things of that nature. It's going to teach you about price action and market sentiment, understanding how price action works with lower lows and lower highs, and identifying trend. That is key because this concept applies to all markets, not just Forex. It applies to futures, it applies to options, it applies to stocks, crypto, indices, all of that. And it's important to understand what it looks like when a bullish market goes bearish and when a bearish market goes bullish. He will go over that throughout this whole process. He's going to show you what a consolidated market looks like and how to spot a consolidated market and what support and resistance looks like, which is pivot points in price. It's going to go over psychological levels of candlesticks, understanding the open, the close, the high, and the wick of the candlesticks. Very, very, very beginner friendly. You're going to go over how to read candlesticks and a little bit of chart patterns when it comes to head and shoulders, double tops, things of that nature. Going to go over indicators. I don't really use them. Don't really need any indicators. He's going to go over back testing. What is a pip? Basically, how you measure the movements in market. Similar to how humans measure distance. How we measure distance in feet, inches, miles, things of that nature. We just measure market movements with what we call pips. And he's going to go over trading sessions, meaning the volatility times and what pairs you should trade during what session. Again, there's 4 different sessions in the Forex market specifically. The market is open 24/5. I mean 24 hours a day, 5 days a week, Sunday through Friday. It is important to know that you don't need to trade all of these sessions. Just because the market are open every day, all day, doesn't mean you have to trade every single session. Pick one session and stick to it. I personally just trade London session, so I stick to it. Very, very, very simple. But this video is definitely beginner friendly, so if you don't understand trading, watch this video and you should get a keen sense of idea on what it actually is and what's going on. After you watch that, I recommend you start to find people that live trade like myself or other people, whoever you want to learn from. Yeah, that way it's important to watch people that live trade, not necessarily just people that post videos, because live trading you get the real raw reaction on what it's like to actually place a trade, do the market analysis, do the technical analysis, pay attention to fundamentals, see how that person manages risk, manages their emotions while they're trading, the movements or how they look at drawdown, how they look at floating profit, how they manage the trade once it's moving, things of that nature. And get the real raw reality of watching people do it live versus them just picking one trade that they took during that week, the best trade, not knowing that that same person lost 5 other trades that same week, ended that week in a red, right? Anybody can post a YouTube video, showing their best trades and hide all of their worst trades, right? So it's important to watch people that live trade. That's 100 is consolidating at the top. If it pulls back into support and holds, it's a good buy. I agree with that. WC production. If it breaks below the lower support zone, wait for the next setup. Yeah, I agree with buys totally. If it breaks below the support zone, even like if it breaks below the support, I still wouldn't even sell it. I wouldn't sell it until price breaks below this overall low. Just because this is the lowest point price was before making a new high, breaking above this previous high to the left hand side right over here. As far as sales, I really wouldn't, even if it breaks below this support, I really wouldn't sell into this range because this is still buyer's territory. It could just fake out sellers and they continue higher, where I will be waiting to buy above this area once again. Other than that, if I want to sell, I wouldn't really. If I end up selling, I really wouldn't sell until price breaks below 24.5. How much money do you need to start? You need it. I would say about $250 to start. You wouldn't be trading that $250 as if you try to make money off of it. Don't try to trade that 250 and try to flip it to 1K or 5K or 10K or a million, right? You're not really trying to live off of that $250 that you use to start. You using that $250 just to build repetition and know what it actually feels like to lose or win any given setup you take with your own personal money. Inside that $250, I will encourage you to risk 1% per trade, no more, no less. Do the smallest possible lot size that you could do with that $250 because you're not looking to make money off of it. You're just looking to build consistency and learn the game. As you learn the game and improve and slowly grow that $250, try to make 10% a month on that $250. That would be $25. Try to make $25 on $250 on a consistent basis a month while practicing proper risk management the whole way through. Don't full port it and make $25 and say, oh, I did it. Don't fucking risk half the account and make $25 and say, oh, I did it. It's important that you must use proper risk management when you're trying to make that $25 or that 10%. Once you do that on a 2 to 3 month basis, then you take the proper route to scale capital. Get access to a lot more capital, and then scale your personal account that way. But I encourage you to trade your own money first. That way, you know what it feels like to actually lose or win, and build consistency and learn the game. But you can start learning on YouTube for free just by watching that 4-hour-long video. It takes no money to watch a long-ass video. And how often do you come alive? I live trade every day, bro. Or ma'am. I should say madam. My bad. I didn't notice you was a girl, bro. I live trade every day. Every day that I actually trade, I will be on live. I don't really trade unless I go live. What's your run percentage, brother? My run percentage is around 73. How long did it take you for you to make good money? I've been trading for almost 5 years. October will make 5 years. My first 2.5 years was straight losing. So I only been consistently profitable for the past a little over 2 years. So my first 2 years of learning how to trade, I was just losing money. Like I was winning trades, not like I was losing every trade I took. I was winning trades, but my risk management was off, my psychology was off. And I was going from strategy to strategy to strategy to try to find what works for me. Once I found my sweet spot and finding a consistent strategy that works for me, which is the strategy that I trade now, then I worked on my psychology and my risk management, and now here we are. But I've been consistently profitable for the past 2 years, and for like my first 2.5 years, I was just straight losing money. Would you teach your strat? Yes, I will teach my strat right here in a live stream, just like I do every day. So, wait, let me look at the trade I'm looking at to make sure I'm not missing my setup before I start talking about my strategy. I will teach it right now. Just give me a second. Make sure I'm not missing my setups. Okay. Hey, EJ is playing out nice. I want to take buys above this high here. So now that we created this lower low, lower high, lower low at my major key level that I'm looking to trade off of, I want to see price reclaim this high. If we can reclaim this high, I would look to take some buy, stop loss below the overall low for about 20 pips. Then I'll look to target these highs up here for my first target. Then I'll have another target, which will be all the way up here to fill in this range, looking all the way back here in 2024, where the price have an aggressive drop. So I'm looking to fill in the rest of this imbalance. Look at this fat ass drop, bro. Look at that. Clean price action to fill to the left. So that'll be my overall target, but we have a first target at our potential highs over here. Other than that, I'll look to take a scaling position at here. So if we break and give us another pullback into this area, I'll look to scale in this position to take another buy here and look to have this same kind of target. But one thing at a time, before we could get it straight, I need our 5-minute time frame to take this high. So let me get into the detail to my strat. So before I talk about my strat, I want to give you an analogy. Okay? It's important that I start off with this analogy. And take this gum out my mouth so I could talk without chewing. Shout out to 37 people in the stream though, 35 people in the chat. So hypothetically speaking, I'm talking to the person that asked me about my strat. I'm talking to you specifically, right? Anybody can answer the questions that I asked during this whole explanation. Hypothetically speaking, say I was in New York and you was a tourist, right? And you came to play this game. I was a host of a game, and I was in Times Square. And inside this game, there is no hidden rules. There is no hidden tricks. I'm going to tell you all the rules right now. Okay? You are to bet $1,000 every time you play this game with me. You get in the admission fee to play is $1K. You give me the $1K, you play the game. If you win the game, I give you back $2K, meaning I give you back the initial $1K that you gave me and an additional $1K in profit. So you walk away with $1K in profit. Okay? The rules of the game. I had 3 crayons. I will put 3 crayons in the bag, shake the bag up, and you pull out one random crayon. But before you pull out a crayon, you must bet that $1,000 that you will pull out the crayon that the color crayon that you say you were going to pull out. So, hypothetically speaking, say I have 3 crayons. 2 crayons are blue. 2 crayons are blue. 1 crayon is red. I show you the crayons in hand. You see me put them in the bag, shake it up. You give me the $1K. Before you put your hand in the bag and pull out one random crayon, you must bet, are you going to pull out a blue crayon or a red crayon, knowing that there are 2 blue crayons in the bag and only 1 red crayon. What color are you going to bet on? 2 blue crayons in the bag, 1 red crayon. What color are you going to bet that you're going to pull out? Blue. Why? Okay, other than you human, but why are you gonna bet on blue? Because there's more chance of winning. Okay, exactly. Because the probability of you pulling out a blue crayon, you have a higher chance of winning. That's true. Does that mean you're never going to pull out a red one? Not necessarily. Yes, exactly. So that means sometimes, even if you bet 10 times that you're going to pull out a blue one, inside the 10 times, you're going to pull out a red one one of those times at least. Because you're not 100% going to pull out a blue every single time because there's not all blue in the bag. That's my approach to trading. The way I trade, I determine a direction of buyers. I want to know if the market is going to go up or down. Okay. I do that by using the daily, 4 hour, and 1 hour. All three of these time frames represent a different color crayon. Okay, so the daily is bullish. That's one blue crayon in my head. The 4 hour is bullish. That is another. Wait, if the daily is bearish, that is one red crayon in my head. If the 4 hour is bullish, that's one blue crayon in my head. If the 1 hour is bullish, that is another blue crayon in my head. So ideally, I will only be looking for opportunities to buy because it makes more sense based off of time frames that buyers are in control to take buys. I really wouldn't be looking for sells because sells is counter trend. The odds of me winning off a sell is a lot less likely than it is winning off a buy because I have more time frames telling me to buy or more time frames that showing me that buyers are in control. I will strictly be looking for opportunities to buy based off of those 3 time frames. Are you following me so far? That's the craziest strat. It's as simple. But when I mean to tell you, my strategy is the simplest strategy. I don't think nobody has a strategy simpler than mine because I trade the bare bone basics of trading. There's no complex shit you got to understand to trade like me, right? Ideally, the market can either go 2 ways. Pure price action, it can go up or down. It can either make a new high or a new low. So ideally, all you have to do as a trader is be right about the direction of the market. Just because you're right about the direction doesn't mean you still won't lose trades. Okay, I could be right about the direction and still lose a trade, but it's easy to identify where you're losing or why you're losing when you're right about the direction, because all that just means is your timing was off. So if buyers are in control and I take it buy and I still lose, but it still goes my way after taking me out of the trade, meaning stop loss get hits and then it hits my target afterwards, that just simply means I was bad at timing. My precision wasn't there. My stop loss was too tight. I was a little bit too aggressive, things of that nature. So it's easy to critique that when it comes to losing trades if you're right about the direction and you're still taking losses. So it's easy to get better at that or to improve as a trader. Or if I'm wrong about the direction and price, I take a trade, I take a buy, the market goes down and completely just dumps. I'm wrong about the direction. I'm okay with that. That just means I pulled out the wrong color crayon. Like, it's okay. You're not going to pull out a blue crayon every single time, even though you have more time for telling me to buy rather than telling you to sell. I'm okay with that. I'm still going to take that same setup every single time I take it because I know the probability of it going higher versus going lower is a lot higher just because I have more time for telling me to buy versus telling me to sell. That analogy is how I navigate the markets. Okay? Now that we understand that, I'm going to go over what I do based off my top-down analysis. I'm a beginner as well. What should I go in? What should I go for in terms of profits, like 2x or 3x? I'm gonna get into that as well. I'm gonna talk about that, but let me go over my trading strategy first. But hopefully everybody understood that analogy and how that analogy reference to trading. Okay. So I like to pick a random pair. Give me a random pair that's not right over here to the right. I'm going to do a full top-down analysis on it right now. Oh, somebody said something about NAS dropping. Let's see. Yep. It is coming down, which is good. I'll need it to come down because I don't want to buy this high. Give me a random pair to do a breakdown on. Not one that I already did here. Just give me a random pair. It could be anything. Because I trade pure price action in the breaks of previous highs and lows, I can trade anything. A pair just means whatever that asset is. So NAS 100 is is the Nasdaq. So that's a pair. Euro JPY, or that's a asset. Euro JPY is a pair, where it's the euro dollar compared to the US dollar. Euro USD, Euro JPY. Like, these are pairs. US 30 is an indice, but they all just means the asset. Like, that is the asset. Gold and Q, I already did those, but we're gonna do them again, just for fuck's sake. Let's just do gold. XAU USD. Let's do forex.com. Okay, this is how I trade. Let's remove all drawings and get a clear fresh chart. I start from the daily time frame. My first approach is trying to get a keen sense of direction, whether I want to buy or sell. How many time frames that let me know that buyers are in control? How many time frames let me know that sellers are in control? That's how I pick what colors are the crayons that's going in my bag. So daily time frame is buyers, bullish How do I know? Price created a new high up here that broke above these previous high all the way to the left here. Simple. When I mean to tell you my shit is so simple to understand, you about to see right now. This is simple. Also, if you look more relative to current price, price made a new high above this high here. Let me know buys are in control. Then I go to the 4-hour time frame. So this one blue crayon, meaning buys. I should be looking for buys. Go to the 4-hour time frame. Do the same exact thing. Ask myself, are we making new highs or new lows? We're making new highs. How do I know? Because price made a high here. This was the lowest point price was before making that new high. We never broke below it. Price made a new high here. Price went above this previous high here. This was the lowest point price went before making a new high. We never went below it. Now this is current high up here. Let's let you know we're making new highs. Very simple. So it's another blue crayon. Daily is bullish, 4 hours bullish as well. Go to the 1 hour time frame. So what are we doing here on the 1 hour time frame? Again, we're still making new highs. How do I know? Because price made a high here. We broke above this high. This was the lowest point price went before making that high. We never went below it. Again, do the same exact thing. This is our current high over here. Price went below above it. This is the lowest point price went. We never broke and closed below it. So we're still bullish. This is our high here. Price created equal highs. This is the lowest point price went before making them equal highs. We never went below it. So that lets me know I should be strictly looking for buys. That means I'm never looking for sales. So far, our daily is bullish, 4 hours bullish, and 1 hour is bullish. Even if the 1 hour does go bearish and takes this low, I'm still not looking for sales. Just because this means that if price was to trade below this area and print lower lows and lower highs, this lets me know that it's 4 hour is still bullish, daily is still bullish. So I still have more blue crayons in the bag, just opposed to this one time frame it being a red crayon. I wouldn't take sales because the odds of me winning off of sales is a lot less likely, just because there was still more time frame telling me to buy. So I wouldn't be open to taking it. Now that I understand that I want to be looking for buys better than sells, then it gets to me drawing my levels. I trade with support and resistance, and I draw my levels on a 1 hour time frame specifically. So on a 1 hour time frame, what am I doing? I'm marking off my current high, my previous high, and my current high or low. Okay. So in this case, my current high is where price is currently at, meaning this is the current price, my current high. My previous high will be the previous high that price broke. I will use this one down here. And my current high or low, which will mean the lowest point price went before making that new high, which would be this low down here. So as long as price stays above this area, I'm strictly looking for buys. Because I know if price closes below this area, that lets me know that our 4 hour time frame is letting me know that sellers are now regaining control. Because this is where the 1 hour, this is where the 4 hour time frame goes bearish. This was the lowest point price went before making this new high. If price decides to trade below this area, this will be a red crayon in the back for the 4 hour time frame and the 1 hour time frame at the exact same time. This is where the odds get switched, meaning I have now more sellers in control rather than buyers, where I'll be more open to taking sells. And as in the game of probability, it makes more sense to sell below this area. Other than that, I'm strictly looking for buyer opportunities. So let's go back to the 1 hour time frame. This is our current high. I'll put a rectangle around it for the marking off the highest point, the highest wick to the highest body. This is the highest wick, this is the highest body, and I'll use this overall as the whole level of rejection. And I'll do the same thing back here. This will be the highest wick, which will be this wick here. And the lowest body, the highest body, which will be this whole area as a level of rejection. And I trade break and retest. So it's either one, I take a buy if price pulls back into the area, give me a retest of this previous high, and look for a continuation to continue the bullish momentum. Or I'll wait for price to break above this current high, then give me a retest, and then take this trend continuation. One or the other. That's it. If I measure the pullback from the start of the push that created this high, we have almost a Fibonacci retracement. If I draw it from here, it's almost a 50% retracement. If I draw it from here, we have a 50% retracement. So it's relatively close. So not only will we have a 50% retracement off of this area that lines up with the previous high structure, this lets me know that we have a strong chance of having a trend continuation at this level. And if I get buys at this level, we can look to target these previous highs. If I get buys at this level, we can look to target some new highs. That simple. So give you a little recap. I identify what direction I want to go. whether I'm looking for buys or sells, I do that by asking myself, are we making new highs or new lows on a daily, 4 hour, and 1 hour time frame? Once I get that sense of direction in my head, I draw my levels on a 1 hour time frame. These are the 3 levels I draw out: my current high, my previous high, and my current high or low. I mark off my current high or low because that's where I'm looking to take reversal trades. So if I'm looking to take buys, a current high or low lets me know I want to sell below this area. Other than that, I'm strictly looking for buys. Now I'm looking for areas that I want to buy at, and I need price to get to those areas first. Meaning, if I need price to break above my current high, give me a retest, and I'll take the trend continuation, or price to pull back into my previous high, and which will be this high here, and then I take this trend continuation. Either way, I'm open to taking both those setups. Just rather which one price wants to give me. Yeah. Put the music back on. I just like to pause the music when I explain stuff because I don't want the music to like confuse my thought process or I start singing a song and shit. This always works for the most. Not gonna say it always works because I do lose trades as well, but I win majority of the trades I take. I have about a 73 win percentage. She's the runner. She's the track star. And if you wanna do your own due diligence and research, just go on my YouTube channel, which is it right here. Go to my past live streams, and you can see any other live stream that I previously did. This go back 3 years. But I haven't been trading the same strategy for 3 years. I think I've been trading this same strategy for like the past year. And you can go back to any of my other previous live streams and see how I actually live trade. If you don't want to look at it like or do that much watching, go to my YouTube shorts or TikTok shorts, and where we have a trade I break down. So I can show you like a live trade breakdown. All of these videos that you see here where there's live trade breakdowns, these are all trades that I took here on TikTok Live or on YouTube Live, literally. So I just clip up the live, make it to a YouTube short or TikTok short, and I upload it. So let's just watch this one, for example. Okay, let's not watch that one because I was talking mad fast. Look at a different one. Let's watch this one. As you can see, this is where current price is. This candlestick is still moving. This lets you know that this is not a recording of something I did. This is actually me talking in real time. And then I fast forward it, like recording of me actually being in trade and how the candlesticks look. Then you're going to see it go to the end of the video. All right. So yeah, that's what that looked like. What's your buy zone area for NAS? The previous highs on the 1 hour time frame. If you go on the 1 hour time frame and you look on the 1 hour time, I just said the same thing like 3 times. Look at the 1 hour time frame. Look at this high here. This is where price. This is previous high price broke before making a new all time high up here. If we can get a pullback into this area, I would look to see if this area could hold for a potential buy continuation. This was yesterday's trade, right over here. Another thing I don't do is I don't delete my previous trades. So if I take a trade win or loss, I always lock it and leave it on the chart. That way, when I come back, I can review it, or when I'm for teaching purposes, like when I'm doing like a one-on-one coaching call or something like that, and I want to talk about previous trades, I could just always find my previous setups. And I do that for every single pair, so not just NAS. So even if I go back like mad far on NAS, you can see all of the other trades I took on NAS. Like back here. I took a loss here on these buys. Actually, yeah, I took a loss here on these buys. I took a win here on these buys. Took a win here on these buys. I took a nice win here on these sells. So on and so forth. I could do the same thing with gold, right? Looking on gold, You see all my previous trades. I took a gold loss here, took a gold break even here, took a nice gold 1 to 4 win here, took a nice gold bot win here, nice gold 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 win here, gold loss right over here, so on and so forth. You can look at GJ if you want to. Look at our previous GJ setup. Actually, I haven't been trading GJ because it's been choppy as fuck. I did get a nice little win here for about a 1 to 2. And I got a nice win here for about a 1 to 1, so on and so forth. Where did you learn how to trade? I learned from YouTube. My YouTube is the same as my TikTok. It should be Tradeaholic FX. Where did you learn how to trade? I learned from how much you made today. I haven't taken a trade today yet. I haven't taken a trade yet today yet. Still waiting for my setup. I am very, very, very patient. But I am anticipating that this level could hold. So as price did reclaim this low, I like this lower high, but this lower high is too close to this one. I need to see a new lower high that was closer to, relatively closer towards my level, that way I can have a bigger risk reward. As far as EJ, again, we having a steep lower high. Just let me know that this level is not holding. If the lower high, if the price pulls back into the area and it's too aggressive, it doesn't give me entry, I just don't take it. And that's how I avoid getting caught in fake outs. So, like, for example, I was looking at buying off of this area. Just because price tapped into it right over here, that doesn't mean I buy immediately. I need to see a entry confirmation at that area before I actually buy. Okay? So it doesn't meet my entry criteria. I don't take it. If it goes without me, I'm okay with that. If it fails to hold and continues down, I'm okay with that too because I just avoided a loss. Most of the time, if a retest comes down and doesn't break structure, it's probably going to be a fake out. So as you can see on this retest, we have lower lows and lower highs. Until this bearish momentum dies out, where we regain controls, where the buyers regain control on this 5-minute time frame, I am not taking a buy yet until the selling momentum dies out. So if it doesn't die out and it just continues going down further and further and further, that lets me know that this was a weak level and I avoid taking a fake out loss. But that's why I haven't bought yet after this level, even after the price tapped into it. Same thing here. Even though price tapped into it here, I didn't buy just yet. I need to see the level hold up. The level doesn't hold up, meaning we have clear structure that gets invalidated where buyers regain control. I just simply don't take the setup and wait to see how price plays out. So I'm very, very, very patient. I think that notification I just got was a YouTube sub, whoever that was. Appreciate that YouTube sub, bro. Let's look at our NAS 100 trade from yesterday. Let's review it. So looking at this NAS 100 trade yesterday, when I came onto the charts, actually, we're going to review it in real time. Let's go to yesterday's YouTube live. Yesterday's YouTube live was about here. We live streamed for about 2 hours. Let's fast forward to when I got to NAS. This was gold. This was GJ, NAS 100. Okay, so this was the NAS 100 breakdown from yesterday. We can actually watch it. All right, we're gonna watch it in 2 times speed, to be honest. Okay, that's too fast. No, I don't trade OTC. I got you, Assassin. I'm gonna answer it in a second. All right, so this was yesterday's trade on NAS 100. So when I first came to the chart, market was up here. I said if price could pull back into this previous high area, we could look to take a buy signal. Price eventually pulled back down. I dropped down to the 5-minute time frame just to see the structure on that pullback. Then in the 5-minute time frame, I see we had clear lower lows and lower highs that happened right over here. Price started to slow down right over here, creating equal lows. Once I seen these repetitive equal lows, I marked off this 5-minute lower high to see if price could break above the area. Once price broke above this area, let me know that this level is actively holding. And now we have the seller momentum dying out on the 5-minute chart, where buyers are regaining control. I took my entry as the 5-minute candlestick closed above these highs. With my buy, I had my stop loss below these overall lows because this was the lowest point price went before lowest point price went inside this level. So I look like, okay, we could respect this low down here. We should continue bullish, meaning buyers should stay in control. And then that was the idea. And then I looked to target these previous highs to the left hand side and a little bit above it, just because this was all-time highs at that time. And we have new all-time highs. So I'm anticipating now this same thing that happened back here with break and retest of these highs happen over here with a break and retest of these highs. It doesn't mean I try to sell or try to fade these highs up here. Just because I'm anticipating that price pulls back into the area doesn't mean I got to sell it on its way down. Just simply wait for a price to pull back and then continue higher. If it takes too long, I just trade something else different. That's why I have a lot of different pairs here, right? I trade the quality of the setup, not just being in that setup or being in that pair. Because the high quality setup on NAS 100 looks all the way down here, and price has to even get here first before taking a trade. It's not something I should be looking at today. So I should be focused on something that looks a lot more high quality. That's why I'm looking at EU, EJ, and GU, because I think these have a lot more quality of a setup than looking to try to force a trade on NAS. But this was NAS yesterday trade based off of the live stream. So as of right now, what are you looking for? Highs, or are you looking for spots to buy? So I look for spots to buy or sell based off of whatever the direction is. So in this case, for EU, I'm looking for spots to buy. Well, I already have a spot area to buy. I just need the 5-minute time frame to show me structure first. So I have the break. I have the retest. I have the break here. I have the retest. Now I need to see structure on this retest, meaning I need to see 5 minutes show me lower lows and lower highs. As you can see, we have those structure points here for this price action. Now I'm waiting for one of these lower highs to get broken, which will be this one all the way up here. Now I have to ask myself, is buying up here worth it? If I buy up here, my stop loss has to be in it. It's important to understand stop loss placement. Your stop loss should be in the area that invalidates the trade idea. So if buyers are in control, my stop loss should be in the area that lets me know sellers are regaining control, meaning us buyers are now getting overthrown by the sellers. That way, when you get stopped out, it should be because price is reversing on you, not because you get stopped out and then it's going your way. That's how you try to minimize that. Put your stop loss in the area that invalidates your structure. So if I have a bullish bias, my stop loss is in the area where sellers are regaining control. Based off of that, if price comes back all the way up here, sellers regain control. If we retake this low, that lets me know that price is making a new low. Stop loss will be below here. And based off my target, if I'm targeting previous highs, for my first target, that would be this high right over here. Look at this risk reward at 0.5. This risk reward doesn't make sense. So even though this could happen and it could hit this TP, because buyers technically do regain control at this area, would I be open to take a trade that has a 0.5 risk to reward just for my first target? No. So taking this doesn't make sense on a risk reward aspect. For a technical analysis aspect, it does make sense. But for my first target, it doesn't make sense. So to get a better entry or a better risk reward, I have to get a better entry. An entry that will be closer to my stop loss. In order for that to happen, that means price has to come up, create a new lower high that is lower than this one, re-break this low, make it a new low that will confirm this to be a lower high. Then I will wait for this lower high to get broken, which is giving me an entry closer to stop loss or closer to the overall level. have stop loss below the low, then look to target the high. Now, this way, my first target is at least a minimum of a 1-to-1 where I can manage my trade, bring stops to break even, things of that nature, and then have a further target, which would be up here or up here for about a 1-to-2 or 1-to-3 risk reward. Other than that, if price just overall continues going up without re-breaking this low down here and hits this target, I'm not going to get mad and say, oh, I should have took the trade. Like it's part of the game. The market doesn't give you my entry, just simply don't take it. If everything doesn't happen the way I planned it, step by step, it's okay. There will be other setups to take. I'm not going to cry about it. That's why you see this arrow here. Meaning, if I don't get the trade that I want down here because it doesn't fit my entry criteria and price continues higher like I intended to do, I'll wait for the same kind of setup that happened right over here to just happen up here. And I'll look to trade in this range instead. That's it. That doesn't mean try to force this with a negative risk reward based off my first target. I just wait for something else, which would have to be something that happens up here. So wait for this same setup to happen just up here instead. I said the same thing like 3 times in a row just now, bro. Ignore that. Holy fuck. But yeah, you never said about taking profits. Oh, okay. So let me I have an analogy for that as well. So hypothetically speaking, wait, let me look at this. Okay, I like EJ better than more than I like EU because I'm looking at this high here. So I might actually get this straight. Okay, let's see if the stop loss makes sense though. If I get this high here, my stop loss have to be below this low. 29 pips, 28 pips. We around it to 30. And let's see what this TP looks like. So this will be a 1-to-1 up here. This range is kind of tight though. Let's look at the higher time frames. Look at a 4-hour. Yeah, I don't want to. Yeah, this 4-hour have a massive rejection in the same exact area. I don't want to trade this range. This range is shit. Not with that big of a stop loss. If I had a tighter stop loss, I would trade this range, but the stop loss is too big to trade this tight ass range. So I'd rather just not take that. This looks a little bit lower quality for me. So this is my analogy about taking profits. If you was at the casino and if you was playing the game with me, right? And same gambling game, because at the end of the day, trading is gambling. It's just different. Okay. If you was gambling with me, and if you're sports betting, right? You're sports betting, and you said, okay, let's not do sports betting. Okay, let's go back to you gambling with me. You gambling with me, right? You playing the game with me. Your initial fee was $1,000, $1,000, right? And we betting on a horse race. Your initial fee was $1,000, and you betting on the red horse. Okay, hypothetically speaking, you betting on the red horse. The race start halfway through the race. You see the red horses winning, and I'm the person that's hosting the game. I say the red horses is winning right now. If the red horse wins the whole entire race, you can make $2K. You can make $3K. I mean, I give you back the $1,000 you initially gave me and an additional $2K. So you make $2K profit. Okay. Or you can take half of the $1,000 that you initially gave me. So you could take $500 back. And if the horse loses, you only lose $500. But if the horse wins, instead of you making $2K, you make $1,500 profit. What would you do? Hold on to be open to taking the $1,000 loss, or at least take $500 off. And if worst case scenario, you lose the race or you lose the bet, you only lose $500 instead of using the initial $1,000 that you put in, knowing that the race is already started and the horse is already winning. That doesn't mean the other horses can't catch up. But this question gets a little bit tricky. Probably take the deal for the 3K. Okay. So if you would take the deal for the 3K, that would be you trading the risk reward. Okay. That would be that'll be equal to you. Yeah, same. So y'all would take the deal for the 3K, right? Now that would be the more aggressive approach. So still hypothetically speaking, I'm a person that take partials. I partial out trades. The reason why I take partials is because I use it to minimize my risk. So hypothetically speaking, do you open trade right now? I'm waiting you. I'm not in the open trade right now. No. So once price, let me backtrack a little bit. I don't let a winning trade turn to a losing trade. So if I bet $1,000 on something and that bet goes up $1,000 in profit, if I don't take anything from it and it overall goes to stop loss, I'm going to be mad at myself because I'm going to say to myself, I seen $1,000 floating in profit, meaning at any given point I could have took that $1,000 and been happy. But instead, I was chasing that 3K goal, or that take the 3K deal, and I let that 1K floating profit turn into a minus 1K. Mentally, that wouldn't be good on my mental, because I'm gonna be like, bro, why the fuck didn't I just take the 1K? Like, I should have just took the 1K. It was right in front of me. Like, I already see myself floating 1K in profit. I could have just closed it right there and hit my first target. That's me letting a winning trade turn into a losing trade. Or or for somebody that's trading risk reward, you're comfortable with losing the 1K and you say, I'm chasing the 3K. I want the 3K, so I'm going to take it. The longer you're in the trade, the longer you are at risk. Yeah, better safe than sorry. So the safe route to minimize risk, like the middle ground would be to minimize risk while still being in the trade. So if my trade has risk reward potential to go for a 1 to 3 risk reward, and it runs up to a 1 to 1, and I take 50% off, if that trade loses, I overall lose nothing. If that trade even runs to my 1 to 3, I'm still in it for the long haul, making the initial money I wanted to make just cut in half. Yeah, you hate it because it's a psychology thing. So hypothetically speaking, say I'm in a trade. I bet 1K on a trade, meaning my stop loss is equal to $1,000 red, like $1,000 loss. Right? Hypothetically speaking, say I'm in a trade, I'm floating. I bet $1,000, I'm floating $1,000 in profit. If I close half of my trade, so if I'm in it with 2 micros and I close 1 micro, that means I close half of my trade. If I'm in it with 2 lots and I close 1 lot, that means I close half of my trade. So if I'm in a trade where I'm floating profit 1K and I risk 1K. If I close half my trade, that means I secured $500 in profit and I still have $500 running. If that trade now reverses and hits that loss, my initial risk not 1K anymore because I closed half of my size. So if it hits that loss, it will net minus 500. But if you notice before that I told you I closed 500, the 500 I closed and 500 I just lost will equal out to be a break-even trade. So ideally, I hit stop loss. I didn't lose the money because I took partials off, and I didn't make the money because I took partials, and I didn't lose because the partials that I took canceled each other out, overall being a break even. And if it doesn't reverse and I take partials out, meaning I secure 500 and it goes even higher in value, I'm still able to participate in that race as it's continuing on, meaning as it's going further and further and deeper into my profit target, meaning that 1 to 3 risk reward. That way, I take partials to minimize my risk, but also being open to make money without losing. So that's why I partial out. I use it as a risk management tool, not necessarily as of looking at it to make money. My partial out, I'm not looking at my partial out to make money. Looking at my partial out to say, just in case this trade reverses on me, I don't lose anything. And that will end my day at a break even. I'd rather take a break even day where I close partials at than to chase that higher risk reward target. Yes. When I said in the beginning, like I'm more patient, I'm more conservative, I mean that all across the board, not just my trading strategy. Like I'm patient with my trading strategy, I'm patient with my risk management, I'm patient with everything. I'm conservative with everything. And notice that a lot of people that the people that have high risk to reward ratios lose more often, simply because they let their winning trades turn into losers. If I was on TikTok earlier and I seen somebody floating up like a 1 to 2 risk reward, and then he made Like he recorded before and after where he floating up and he showed the P&L. Then later on, he came back and said, I lost that trade. And I'm like, bro, you made 2 times your initial investment floating P&L. Why didn't you at least take something? You just let that winning trade turn to a losing trade when you're already up 2 times what you risk. You risked $200. You seen 400 in floating profit. Why the fuck didn't you take at least something? That way, if it does reverse, you still walked away with something or you didn't lose anything. It's like a win-win. So most people that have high risk rewards ratio on average tend to lose more trades simply because they hold their trades for longer periods of time. Versus somebody that like me, that I have a higher win percentage because even when I lose a trade, I win. Literally. Not quite literally. But even when I lose a trade, like that hits my stop loss, if it hit my first target before hitting stop loss, I technically didn't lose. Because it overall been a break even. You're keeping some money to keep playing instead of betting everything and not keep playing in a way. Exactly. So I'm keeping some money in to hold that trade on for the long game at the same time minimizing my risk. That way I'm not just still got my ass out. Like I'm not still in too much risk. Because at the end of the day, trading is a game of longevity and how long you can hold on to your account, right? How long can you trade without blowing it? The money's going to come second nature to you have an account to trade. So if you could protect risk at all costs, that's how I approach it, then I'm going to protect my risk. So when I start trading $250, would I be able to profit trading 1% of my portfolio? Like say $3 isn't there fees and stuff? So there are fees like commissions. So you pay commission every trade in spread when it comes to Forex trading. Not futures. Futures don't have spreads. But Forex, you do have spreads. But commissions is not a lot when it comes to smaller accounts. Like your commission on the $250 account is probably gonna be like fucking 2 cents, 3 cents. So yeah, there are fees and stuff, but the fees get bigger when you have bigger size accounts. So even the commissions on like $1,000 account is not really a lot. It's probably be like a fucking $1.50 maybe. It's good to trade whenever the opportunity presents itself. See, I try to trade every day. That doesn't mean I do trade every day. If I come to the chart and the market it looks choppy and it doesn't give me opportunity, I don't force opportunity just to try to trade every single day. I trade when the opportunity presents itself. So I come here every day to try to find a trade, but if it doesn't give me my setup, I just don't trade. You got to keep in mind, the more trades you take, the more risk you are at. So it's important to keep your trades low, but that doesn't mean miss out on good opportunities because you're trying to keep your trades low. So me, I take 1 to 2 trades a day, and this is a part of my risk management plan, right? Taking 1 to 2 trades a day, this lets me be able to get in a trade to make money on a day while not risking too much. So if I win my first trade, then I don't need to take a second one because I'm already up on the day. I made money on the day. I don't need to take a second trade. I don't want to take a second trade and potentially lose what the market already just gave me. Okay, that's a part of risk management, right? If I win this first trade, I don't need to take a second one, so I don't take a second one. If I lose my first trade, I will take a second one. Well, I'll be open. I'm not going to force a second one, but I will be open to taking a second one just because I want to make back what I lost and try to end the day in the green, giving me some profit. Doesn't mean I force a trade to revenge trade that second one. The opportunity presents itself and the setup looks nice, I will take it. But if it doesn't look nice, I just won't take it. I will just end the day in the red. Also, max, I lose 3 trades a week. I don't lose no more than 3 trades a week. It's a risk management thing. Worst case scenario, I lose my first 3 trades. I take a trade Monday, I lose. I take a trade Sunday, market open, I lose. Take a trade Monday, I lose. I take a second trade Monday to try to make back what I lost, I lose again. It means I lost 3 trades in a row. I'm not going to try to trade Tuesday, Wednesday, and Thursday and Friday. Makes no sense. Because if I cut my week short and come back the next following week,
price will be at newfound levels, meaning during that whole time I'm not trading, I would see new highs, new lows, new supports, new resistance, new price action. That way, by the time I come back to the chart, we will be in a whole different area of price. We may even be in a new cycle. Like we might not be in a manipulation phase anymore. We might be in a distribution phase now. We might not be in a consolidation phase anymore. We might be in an expansion phase. We might be in a reversal phase. We might be in a pullback phase. We may be even in a whole different phase of the market. Meaning I'm trading off of found new levels with clarity after taking 3 consecutive losses. Worst case scenario, I lose all 3 of those trades. I'm down 3%. Coming into that following week, I can hit a 1 to 2 risk reward 2 days in a row and make that back that 3% and more. Versus trying to call myself out of a deeper drawdown that I'm already in, being so I lost my first 3 trades, and now I'm in a week -6 or -7%. Now coming up to the next week, I got a lot more coverage to make up to even end the month in profit. So once I lose 3 trades, no matter when those trades happen, they can happen all in the same day or they can be spaced out. I will cut my week short at whatever day that is. If I lose a trade Monday and 2 trades Monday, I win Tuesday, I lose a trade Wednesday, I'm not trading Thursday and Friday. Just because I want to be in it for the long game, and I'm notice I'm in a downward spiral. So I would just cut my trades short and say I'm come back next week. Shit like that. You got funded? Yeah, I got funded. I'm funded 2 different pot firms. I trade funded accounts and personal accounts. Do you have to watch the market every day? Let's say you go to sleep. When you wake up, are you still watching the market? No. That comes into session. So I only trade during London session. So I only trade from 1 a.m. to about. So if I start at 1 a.m., I'm off by 4 a.m. If I start at 3 a.m., I'm off by 5:30. So I trade for about 2.5 hours a day. So if I don't get a trade in those 2.5 hours, I go to sleep, or I go on about my day and I come back the next day. Like I'm not sitting here watching the trade, like trying to get a trade all day. If I get a trade during my session, I get a trade during my session. If not, I just come back the next day because there will always be more opportunities in the market. Are you selling before we go to sleep? No. I'm just waiting for a setup. I'm waiting to see if this level holds. So far, it looks like it's holding. So remember how? Oh my god, I can't make this shit up, bro. This is why it's important to watch me that live trade, because you see everything that I said in real time playing out. I literally said I don't want to enter this high because that kills my risk to reward. I need to see price create a lower high, rebreak this low, and then I'll get to enter at this area. Literally, that's exactly what we're doing. We made a new low down over here. Looks like we're making a new lower high. If we could retake this low, like I said before, I'm going to turn my entry to just right here. Give me a better entry. I literally set all of that shit to a fucking T and doing it just like I said it, bro. Holy shit, my ego is just through the roof right now. But I'm waiting for my opportunity, right? I need everything to happen in order. So in order, I need to see this low get retook. If we retake this low, I will take a buy at the break of these highs. Stop loss below these lows for about a 20 pip stop loss. Now I'll look to target these highs, giving me a better risk reward than I had if I would have entered up here. Hold on real quick. Hold on real quick, bro. I need to change my screen real quick, bro. All right, we should be good. Why didn't refresh? Fuck. All right, we should be good now. Oh wait, didn't mean to do that. Right, there we go. Trading requires a lot of discipline. Yes, indeed. So I need 10K to trade $100 basically. So you don't need 10K your own money. You can use prop firms. You can get funded. But it's important. It's important to have a strategy to get funded and not just go in like full on full port and shit trying to get funded. It's important to have a strategy. I have a good strategy to get funded. If you want to hear it. Let's turn the music back on. How do you get funded? So funded companies. Oh, this music too loud. So getting funded. So there are companies that will fund you money like 10K, 50K, 25K, 100K, 300K, 200K of funded prop money. That way you could trade their money and they will give you a payout based off of the money you make. So if you make 10%, they will give you like an 80% payout. If you make 10% on a 100K account, they will pay you out a little under 8K for 80%. If 90%, they'll pay you a little under 9K, something like that. If you make 10% of that account. And they have rules, that stuff that you have to follow in order to be eligible for that payout. Also, they have rules stuff you have to follow to be eligible for that funding. Am I rich? No, I'm not rich. What's the best simulator to simulate trading? Got you right here. That's a good question. It's called FX Live Capital. So I'm gonna show you it right now. Not FX Live Capital, FX Replay. So FX Replay. There we go. FXReplay.com. Sign in, open an account, sign up for account, whatever. I'm gonna sign in with Google. Right here, click Game Battles. Game Battles right here. Press new session. I'm just gonna put live. Let's make this a 100K account. Let's do NAS 100. Layout 1. Okay, wait, hold on. Hello, is this the right fucking thing, my nigga? Not new session. Press Game Battles here. Now you press new battle. There we go. Press next. Press 100K. Make it one participant where it's just you. Close all of these. Put NAS 100 or whatever you want to trade. If it's gold, if it's GJ, whatever you want to do, put it. Press next. Make your max drawdown 10%. Make your max daily drawdown 5%. Make your max risk per trade 1%. Because this make your profit target 10%. Because these are the rules of prop firms, right? You get a 10% profit target, you get a 10% max drawdown, you get a 5% daily drawdown, risk 1% per trade, just to manage your risk. Press next. Press create. It's going to put you at a random point in price on NAS 100. So it's going to give me a random simulated price that actually happened in real time. So it will give me show price action from something that actually happened in the past. It's not going to tell me where it's at. That way I can't cheat, go to TraderView and just search it up. So it's going to put me in a random point in time. Press start. Game battle starts in 3, 2, 1. And it's going to put me a random point in price on NAS 100. So we're going to delete the volume indicator because I don't use indicators. It looks something like this. As you can see in the bottom right hand side, you will see your account balance, which is 100K. You will see your realized P&L and unrealized P&L, but your float profit, things of that nature. Here are all your time frames. Just like TradingView. Here are all your tools, just like TradingView. Also, here is where you play the candlestick. So if you press 1 minute, it will show you 1 minute worth of data, right? So that way you don't have to play the whole candlestick. I can play 1 minute of an hourly candle, like that. See how it's moving a little bit? This is 1 minute on the hourly time frame. Want to change it? Just go down here and scroll and change it to the 1 hour, 4 hour, whatever it can be. So you would do your top down analysis like normal. So for me, I'll start off on a daily time frame. Ask myself for making new highs and new lows. So making new highs, bullish. 4 hour time frame, making new lows, bearish. How do I know? Took this low. 1 hour time frame, bullish. I would wait for a 1 hour time frame to go bearish. 1 hour time frame doesn't go bearish until the price takes this low. I would change this to the 1 hour time frame just to fast forward everything and see if price come down to take this low. Okay, we took this high first. This is where the 4 hour goes bullish. The 4 hour went bullish above this area. Our 1 hour was already bullish because we're making a new high. This is our previous high to the left hand side. Let's see if we can get a pullback into this area for potential setup. We continue higher. No pullback just yet. Okay, now I'm looking at the same thing. We have a price breaking above this area. I'm breaking above this area, so I'll wait for a pullback into here or up here. So we got a break, we got a retest. Go to the 5-minute chart for entry. Look at the retest. On the retest, price took this low. Let's see if we can get a potential entry. So let's play 5-minute time frame. So we took this low as well. So I would set a buy stop at the break of this high, stop loss below the lows, and have a target of at a new level. I'm not fully giving you a full breakdown because I really don't feel like doing this, but let's play this to see how it holds up. I'm not in a trade yet. If it continues down, it continues down. If it comes back up, it comes back up. So it looks like it's coming up. Let's see if we get triggered in this position. Didn't get triggered just yet. So you're making a new low. As price came to take this low, I will trail my entry from here to here. And see if we can get triggered. If we don't get triggered, we don't get triggered. So what? Okay, we would have got triggered right over here. As I said before, stop loss will be below this low. And I look to target our next key level. But I don't feel like going to find a key level, like, to be honest. Change it back to the hourly time frame to see how the trade plays out. And we would have hit TP up here. But I didn't actually do it. But to do it, you will click on the position right over here. Press add place order up here. Wait, click on the position, press place order. This will be a buy entry, press save, and then it'll show you your actual P&L. So I just did it just to do it. And once you play the candlesticks, you will see your P&L right here fluctuating. See how was it $91 in profit? And all the way until stop loss or TP gets hit. So it would just play. So now you're up 1K. And you see account balance $100,000 and $800, so on and so forth. And if you still get hit stop loss, you will see it will say minus P&L. So minus 900, whatever. So this is how this works. This is the best way to simulate trading. But this setup was some gas though. Was this not some gas though, my nigga? This setup was some pressure. But yeah. And that wasn't even me really trying to make a setup. That was just me fast tracking it, to be honest. How much do you leverage? My personal account leverage is 1 to 100. Is there a lag response between the trade made in the market? It depends on what broker. Is this all fake? Like if you were actually trading? Yes. So this is just simulated, meaning it's not real markets. Like it's not the live market. It's just simulating the price action that happened before in real time, letting you practice. I do options. Can you put me onto the Forex game? The Forex game is similar to the options game. Just use different terms. How much do you like? Very beginner friendly. I don't really know the difference between sessions yet. Mainly use the New York session. All right, so go on YouTube, type in FX Alex G, Ultimate Beginner's Guide to Forex Trading. This is a 4-hour long video. He will go over sessions, as you can see here. He will go over pips or points. I think options, y'all call it points. He will go over how to measure pips. He will go over back testing, things of that nature. He will go over tools, trading view indicators, chart patterns, candlesticks, price action, higher highs and higher lows, trend, market sentiment, everything. Everything beginner friendly. When it comes to price action and trading, you will be able to understand after watching this video. Also, by the end of this video, everything you learn in this video directly correlates to other financial markets as well, not just Forex. So it correlates to options, futures, stocks, crypto, etc. But watch this video right over here. Just look up FXology Ultimate Beginner's Guide to Forex, and you should be good. After that, watch people that live trade like myself. That way you get the real raw reality of trading and not just video people highlighting their videos, right? Again, videos is just like highlight tapes for videos are just like highlight tapes for NBA players. Like everybody gonna look like the best point guard when they put a mixtape together. Same thing with YouTube videos. Everybody gonna look like the best trader in the world when they put a YouTube video together. That's why it's important to watch people that live trade. That way you see their wins and their losses, not just their mixtape. That was fire. Yeah, that was fire. But it gives you 10 minutes, but you can skip hours on it, right? Yeah, you can skip hours on it. And I think they have a free version where you get more time. It's just not in game battles. So they have, you got to play with it a little bit. I think they offered different ones. They do have a paid service one as well, where you can get longer time. But game battle specifically is used to compete with each other. So me and my friends do it to where we will all be in a Discord call. We will all start a game battle and we will all be in the same game. So we all be in the same room trading the same pair at the same exact time. And whoever hit the first 10% profit target first, they will win. Like that. And they will highlight them. It will show their stats. Like it will show their 1%, their risk reward ratio per trade. It will show all that stuff. So I do it as a competition. But there are other ones on there outside of game battles that you can simulate where you get more time. You just gotta play around with it. You don't have Discord? Yeah, I do have a Discord. My Discord is free. I do also do one-on-one coaching in my Discord for free as well. Fire analogy, COVID trading Forex was gold rush. Nah, yeah, COVID had everybody tweaking out, but I ain't hating on it because I joined Forex during the COVID era as well, and I did get scammed, but it opened my eyes to what's possible, and I just pressed through and got through the whole scam phase, and I did my own research to figure out how to do it myself. Hopefully you still live tomorrow so I can ask more questions. Nah, tomorrow I go live every day during London session. So I will be live tomorrow around the same hours. How many prop firms do you have? I'm funded with Top One Trader and Alpha Trader. Do I have to adjust strategy? I do highs and lows, 15-minute look for 1 minute entry, breakout, aim for imbalance. No, you don't have to adjust strategy. As long as your strategy, if any strategy that is based off of pure market structure, meaning the breaks of highs and lows and fills, things of that nature, you don't have to trade your strategy. Like me personally, I trade pure price action when I take break and retest of previous highs and lows, breakouts and break and retest, things of that nature, of support and resistance. So I can trade any kind of market. I can trade stocks. I can trade stocks. I could trade crypto. I could trade. I do trade crypto. I don't trade. I position size hold crypto. So long term investment in crypto. But any features, anything, I can trade anything just because I trade pure price action. Confirmation candlesticks above and below too. But yeah. So you don't have to. That's similar to. That's exactly similar to how I trade with confirmation candles above the highs or below the lows, things of that nature. Very similar to how I trade. So no, you don't got to change your strategy. You know how to scam? No, I don't know how to scam, bro. I don't scam people. What's your? When I said around the pandemic, I meant like I was getting scammed. Meaning, I joined a I joined a multi-level marketing group that was supposed to be teaching me how to trade, and I was paying them a monthly fee, and they wasn't teaching me how to trade. So I was paying them, and I wasn't learning how to trade. Once I realized that I was a part of a multi-level marketing scheme, I stopped paying it, and then I went to learn on my own, and that's how I got into trading. What's your favorite time frames? Daily, 4 hour, 1 hour for direction, 1 hour for levels, 5 minutes for entries. Mine doesn't even work for certain stocks yet. If yours doesn't work, if your levels doesn't work for certain stocks, it's because you have a flaw in your levels or how you draw your levels. You just got to get better with drawing levels, and then you will see that it will work because every stocks have levels. Stocks have pivot points and major levels just like every other pair. So I do what y'all call New York session. What is the best times when it comes to do Forex? So it depends on what you're trading. Me, I like the London session. London session is from 3 a.m. to about 11 a.m. A lot of traders like New York session better because they say New York session has more volume. And ideally, it does have more volume, but it doesn't have more volume because it's New York session. It has more volume because you have London volume and New York volume happening at the same exact time. So London volume ends at 11 a.m. New York volume starts at 9 a.m. So from 9 to 11, you have London volume and New York volume at the exact same time, which gives you that 9:30 candle where most people like to trade. Because you have the London coming to an end and the New York just starting. That's where all the volume comes in. That's why you see a lot of traders don't trade after 11 a.m. That's because the London session is dying out. So that means London volume is no longer in there and it's just strictly just New York volume. But I like London volume. I like London session better because New York session has a lot of news. That's where you see FOMC and unemployment rates and NFP and things of that nature. I don't have to worry about that trading New York session because a lot of that stuff don't happen until the daytime. I don't got to worry about news affecting my trade because I personally don't trade news. If I see anything that's involving USD, it's red folder, I don't trade it at all. Even if I'm in the trade during the London session and I'm holding it up into New York, and you say we got news at 8 a.m. By 7:55, I'm closing my trade. I don't give a fuck where it's at. I don't care if it's in profit or in drawdown. I'm closing that bitch wherever it's at. Do you sell a course? No, I don't sell anything. You're spinning facts, bro. I hop on the charts and in the morning 9 a.m. candle goes crazy, probably due to London. Yeah, so it's because you have New York open at 8 a.m. But on top of the New York open, you have the London session already being in this volume at the same exact time. Well, New York open at 9. Well, New York futures at 9 o'clock. New York Forex at 8 a.m. But because you have that London and that New York overlap, it gives you a lot more volume. But that's why it starts to slow down around 11 a.m. because the London session just came to an end because it's nighttime in London around that time in the U.S. and it's just London session. New York session. My bad. Just seeing the frozen on YouTube. Yeah, I just had the wrong tab open. So I trade break and retest too, but confirmation candles closing above a level, things of that nature. So I was waiting for price to close above this area, but we got a closure right over here. As you can see, we didn't get a retest immediately. Our retest didn't come to later. So now we got a retest here. Now I'm looking for price to continue higher. Basically, remember I said how you trade similar to me with just breakouts and break retest. Got the breakout over here, but this wasn't in session. As you can see, this was during 8 session. I trade London. So now that we are in London, we have a retest. I'm looking to see if this retest could hold for a trend continuation. I'm looking for buys overall on EU, not really looking for sells. But in order for me to buy, I have to see that this retest is confirmed. So we have one rejection, but technically sellers are still in control on the lower time frames. So I go on the 5-minute time frame and look at the structure that happened on this retest. You can see we have clear lower lows and lower highs, meaning that lower time frame structure is technically still bearish. I don't want to look to take buys here while the lower time frame is still bearish. So I'm simply waiting for the lower time frames, like the 5-minute time frame, to shift bullish. In order for that to happen, I need to see price reclaim this low, making a new low, which will confirm this to be our current lower high, and wait for price to then trade back above this area. Once price breaks above this area, where we have a breakout candle closure, I'll look to take a buy, entry, stop loss below the lows, and look to target these previous highs to the left-hand side, and I have a further target all the way up here, knowing that our high time frames are indeed bullish. Our 1 hour time frame is aggressively bullish, breaking above this previous lower high here, where we shifted bullish. We have this higher high, higher low, higher high, potential higher low. And our 4 hour time frame, which is also bullish, rejecting off of this 4-hour fib level play. We have our higher high, a fib level rejection for potential continuation. So I'm overall bullish on EU. I'm just waiting for price to see if price is going to hold at this level or continue down. That's basically how I trade, like in the fast track. It's just a relief seeing a price action trader on TikTok. Nah, yeah, TikTok get kind of crazy, bro. TikTok live streams be having me cracking up. I be watching other people and I be laughing so hard, bro. Do you ever force a trade? No, that's not a good idea. I only trade when the opportunity presents itself. The opportunity is taking too long, I just go to sleep. I'd rather not force a trade and still have a counter trade tomorrow than to force a trade I know I shouldn't have taken just to still lose it. What part of PA you from, bro? 50. I think you said something about you being from PA. How you know I'm from PA, bro? Hold on. Oh, PA meaning price action. I'm thinking you PA, you talking about the state. I'm cooked. Okay, you mean PA price action. Okay, bet. So you're a scalper or swing trader? I'm an intraday trader. I hold trades from average 4 to 8 hours. But yeah, I got you now. I hold trades on average from 4 to 8 hours, but it doesn't mean I don't hit my targets within that time. So normally it takes me 1 hour to hit my target, like within the first hour. Other than that, I hold longer trades because I partial out my position and I hold the trade all the way till it takes me out. Like, because I trail stop loss eventually. Then eventually when my stop loss get trailed and gets hit, it gets hit. But ideally, I hold trades from 4 to 8 hours because of that. But I hit my first target within the first hour or maybe 2. Depending on if it goes in drawdown. If I feel like it does most of the time, then I hit my first target within the first hour. I'm from PA too. I'll bet. Now I'm like, how didn't I know this? Yeah, I'm from PA, gang. I'm from Philly to be exact, bro. I'm a real trench baby, bro. What capital do you start with? Cause that's all beginners issues. It's not about what you start with, to be honest. A lot that is a lot of beginners issue, but because that's a beginner issue, it makes it even harder because you're worried about the wrong stuff. You shouldn't be worried about what's a good balance to start with. You should be worrying about actually knowing what you're doing. It doesn't matter what you start with if you're gonna fuck it up anyways. Like a lot of beginner traders, like, oh shit, how much money should I start with? How much money should I start with? That doesn't even matter if you're gonna fuck it up anyways. So you should be really focused on knowing what you're doing and learning the skill rather than knowing where to start when it comes to actually putting in money. But I like to recommend people start at $250. That way you get to use like a decent lot size, like a 0.02 or something like that when it comes to Forex, where you're not looking to actually make money, but you're also looking to learn the skill. So I recommend people start with a low account, like $250. That way you could just use 0.01 lots or 0.02, things of that nature. And don't look to try to turn that 250 to a 1K. Turn that 250 to 5K or turn that 250 to 10K. You're looking to try to flip that account. You're looking to build consistency with that account. Try to make small percentage gains at a longer period of time and do it consistently. So look to try to make $25 a month on that $250 account. That's 10%. And after you do that consistently on like a 2 to 3 month basis, then take that same system that you already have and that same percentage gain growth and take that to the prop firm space. So invest in buying a prop firm, like a 25K, 10K, 50K, things of that nature, and then try to make that same 10% a month with only risking 1%. That way, if you do it on your own personal $250 account first, it will be a lot easier to do on a bigger account because all you have to do is do what you already done using the same risk management tools using the same strategy that you already been using since the whole time you've been trading a $250 account. And that way you could get funded and then scale that way. But you're not looking to make money off a $250 account. You're just looking to get better as a trader. I'm guessing North. Yeah, I'm from North. Been trading for 9 years. You actually know what you're talking about. Yeah, I think I'm coming on my. Well, I'm not. I don't think I'm coming up on my 5th year. Come October, you can definitely scale a small account, but it will take risk. Yes, but as a new trader, you don't even know the skill yet. So there's no point in trying to scale a small account knowing that you don't even know how to trade. It doesn't make sense. You got new traders coming in trying to make a lot of money out of a little bit of money without even knowing how to make money in the game itself. It's easy to scale an account when you know what you're doing. Like me, I could scale an account pretty fast because I'm really seasoned as a trader. Versus somebody that's new trying to scale an account, they don't even know how to trade yet, so they just still learning the game. They still learning the ropes. No point in trying to scale something when you don't even know. You're not familiar with it. Is there a system that lets you make one trade on multiple platforms? Yes. There. Just look up copy traders. Rules stay the same. Sizing is what changes over time. Exactly. And I like to teach new people, don't get fixated on a dollar amount. Like, don't be trying to make $500 a trade or $100 a trade or 5K, whatever the case may be. Like, just look at percentage gains, because percentage gains translate over time, no matter what account size you have. 1% will always be 1% of that account. 1% of 100 is different from 1% of 100K. 1% of 100 is only $1. 1% of 100K is $1,000. So if you can get good at making 1%, all you have to do is just get access to more capital and keep doing what you already been doing, which was making 1%. Copy traders, that's going to help with multiple prop firms making one good profitable trade. Yes. You got cooked today doing copy trading? Ooh. But this level look like it's failing on EJ, but look like it's holding on EU. And GU still didn't get me where I wanted. Didn't get where I wanted. And NAS 100 is just still consolidating up here. Pretty trash. Somebody said US oil. You want me to do a US oil breakdown? I got you. Let's do an oil breakdown. Focus on the dollar. Yeah, don't chase that dollar amount, bro. Just get good at making a certain percentage, and then as you get better at the traders, you scale cap. All right, so let's look at the US oil. I did this from yesterday, bro. The one I did yesterday was a fucking banger. That's tough. Let's redo it though. I think somebody asked for this yesterday. I think you were the same person that asked for it yesterday as well. Is he still there? Think 30? Yeah. Let's look at the daily time frame. Daily time frame is overall bearish, but we are consolidating. We're trading equal lows at this bearish level. But we overall are bearish. As you can see, price made a new low below these lows. Then we have a lower low, lower high. Now we have equal lows. The daily time frame is bearish. We'll be looking for sales according to the daily time frame specifically. Let's go to the 4-hour time frame now. Looking on the 4-hour time frame, we are bearish as well. We went bullish here as price came up and made a new high, where we have higher highs, higher lows, higher highs. Then we took this low here, we went bearish. Then this bearish play down here was just a bearish fake out because we retook these highs up here as well, making a new high. This was the lowest point price was before making that new high up here. And now as you can see, price is breaking below this level. So we may be going bearish here on the 4-hour time frame. Let's look at the 1-hour time frame. Look at our 1-hour time frame, we are definitely bearish. We have a new higher high above these highs. Looking here, price. This was the lowest point price went before making that. This was the lowest point price went before making that new high. This low got taken out, letting me know that sellers are now in control. Looking at the seller pressure, we have clear lower lows and lower highs as price is coming down. We have a potential lower high here, giving us a break and retest of this previous low to the left hand side. This is our current lower high. Let me do a recap real quick. Daily bearish. Fuck. Daily bearish, 4-hour bearish. Overall, creating some equal lows down here. We do have to keep in mind that this is a rejection area. 1 hour is bearish as well. It makes more sense to sell rather than buy. I really wouldn't be looking to buys here. As far as sells, I really wouldn't want to sell where price is currently at because this level already got respected and rejected, right? So it's probably if it consolidates here, you could make some money. But again, I really wouldn't want to trade inside this range. buying above it is counter trend, so that doesn't make that much sense to trade above it either. So I really want to look for sales. I would just wait for price to come down, re-break these previous lows to the left and side, wait for a pullback retest, and then trend continuation below all of these lows. This is not only the 1 hour low, this is also the daily equal lows as well, all at this area. Yeah, clean traffic to fill to the left hand side for price to continue down. If we can get a closure below this level. Looking at the 1 hour time frame, let's simply adjust it a little bit. That way we can have capture these wicks. And then you can look to target our next potential rejection area looking left to current price, which will be all the way down here. You have a clean range to fill and it's imbalanced. So yeah, I like sells. Sells below this area, look to target these lows down here. As far as buys, I really want to buy counter in the 4 hour. 4 hour doesn't go bullish until price comes back above this high and trades above this area. This is just a aggressive push with no clear lower highs. So you can't say the 4 hour shift bullish nowhere up in this area. But the 1 hour do shift bullish above this area. So if the 1 hour can shift bullish above this area where we have relatively equal lows, price breaking above this lower high, you can look to take some buys at the counter trend trade if you're open to taking that. But it's important to note that this counter trend trade is lower quality just because it's a counter trend. You wait for a little bit more better counter trend trade up here, breaking above this lower high, where you can look to target these highs all the way up here. But again, this is still a counter trend trade either way. But I would rather take sales opposed to taking buys on US oil. What's your go-to for trading? My go-to is whatever is highest quality. So I'm gonna move my face cam. Anything over here is what I trade. I do a breakdown on all these pairs here. I favorite what I think is the highest quality, meaning the only pro trend trades. And then I'm highlight the ones that's closest to potential entries, and then those are the ones I focus on for the day, which will be these 3. But I do break down on all of them. I don't have a favorite one. I treat all of them equally. I have no favorites. I just trade whatever is highest quality, whatever sets up the best. Do you trade NQ? I trade NAS 100, which is the same as NQ, yes. NAS 100, NQ, and MNQ are all the same thing, just the price looks a little bit differently. If I go on NAS 100, I took a trade on NAS 100 yesterday. That was back over here. Looking at NAS 100 current price is 24.7K. If you look at the price action, pay attention to the price action. If I go to NQ, the price action look exactly the same, right? Just that instead of being at 0.7K, is at 25K flat. If I look at this price action, if I go back to NAS 100, it looks exactly the same. Just that the ticker is a little bit different. How long are you in the charts? I'm in the charts for about 2.5 hours a day, so I'm going to get off here in the next 10 minutes. Do you trade certain pairs? I trade everything you see here to the right of the screen. I am a directionally biased trader. I only take pro trend trades. If a trade is counter trend, I deem it less quality. So I only take A+ setups. Only time I will take a counter trend trade is if I'm already green on the week, meaning Monday, Tuesday, Wednesday, I was already good. Then I will be more aggressive coming on to the end of the week, and I will be open to take a counter trend trade just because I want to try to maximize my gains and still while being up on the week already. So if I lose a trade at the end of the week while I'm already still green on the week, I don't really care. But as far as beginning of the week, I only take pro trend trades and I focus on the quality of every given trade. The reason why I have a lot of different stuff here rather than just strictly trading NAS or just strictly trading US 30 or just strictly trading gold, which is everybody's favorite pairs. The reason why I trade more than just that is because there are different market cycles, right? Meaning you may be in a retracement phase, you may be in an expansion phase, you may be in a consolidation phase, you may be in a reversal phase, you may be in a manipulation phase, you may be in a distribution phase. There are different phases of each of these cycles or if each of these pairs. If my session, the market is in a reversal phase, that means I have to take a counter trend trade just to trade that session, which makes no sense. You're already devaluing your setup just because you're taking a counter trend trade. It already loses its probability. But because that's the only thing you trade, you find yourself taking those lower quality trades because that's the only thing you're looking at. So it's important to diversify what you're trading. That way you avoid taking the lower quality trades and only take the pro trend setups. So I rank all my pairs that you see in my watch list, and I say what's the highest quality versus what's the lowest quality, and I only focus on the highest quality of that session. So NAS 100 is at all-time highs too. Yes, NAS 100 and NASDAQ is the same thing. NAS 100 and NQ is the same thing. Just that NAS 100 is the CFD version and Q is the futures version, but they both are the NASDAQ. Yeah, I don't sell no course. I don't sell no mentorship. I don't sell any signals, nothing like that. All I see is NAS on screen. Yeah, that's what's on screen right now. but there's not. I'm not looking to trade NAS today because I'm looking to buy down here. This is well away. This is far away from current price. I'm not going to sell up here because selling is counter to the overall bullish momentum, which makes no sense. I'm not going to try to fade all time highs. I've been in a couple people live streamed on TikTok earlier that was selling all time highs. I'm like, bro, why the fuck are you selling something that's so high? They're like, well, got to come down at some point. Well, how many times are you going to keep trying to sell it before it actually comes down? Like, it just fucking makes no sense. Like, but I'm not going to try to fade this because it makes no sense. It's low quality trade. I'm not going to buy this high either without a significant retracement first. So what I'm looking to take is on EJ, EU, or GU, whichever level holds. So I was looking at the break retest of this area. This retest looking like it's pretty much failing. But if we can close back above this area on the 1 hour time frame, and the 5 minute time frame shifts bullish above these highs here, I'll be looking to take that buy. On EU, if we could look to trade above this level of lower high here, I would look to take this buy. And if GU could give me a deeper retracement, pull it back into this area, I will look to take sells up in this area to give me this break and retest of this previous level of support looking all right over here. That's the only 3 things I'm looking at. Yeah, I don't sell courses. I don't sell signals. No point in me selling signals because I live trade. Like, why would I make people pay for signals if they could just come to YouTube live stream or the TikTok live stream for free? Doesn't make any sense. I don't sell really. I don't really sell mentorship because I don't have the time to sit here and mentor people. Like, be consistent with going on calls and things of that nature. I really don't want to do that at the moment. I make money off of trading, but I also have 2 other business ventures that's completely outside of trading that also needs my attention. So I don't want to. If I start a mentorship, that's going to take away time from my other aspects of business outside of trading. That's going to like interfere with my like income, and I don't really want to do that. So I live trade just purely for entertainment purposes because I enjoy it and I enjoy teaching, and I want to be the person in the industry that I didn't have when I was a new trader. Just providing all sauce and eliminating all the bullshit that you get taught or the watered down, filtered out shit that everybody else is teaching. So that's really why I don't really sell shit for real. But I do have a Discord community for free, and I do one-on-one coaching on weekends just to provide value, as much value as I can, to one random person. In my Discord, let's pull my Discord real quick. In my Discord, I will sit in the general chat room, something like this, where you see, do you want to be in a one-on-one coaching session? If you vote yes, I will pick one random person from the Discord community that says they want to be in a one-on-one coaching, and I will ask you what's a good time, Saturday or Sunday, to do a one-on-one coaching call. One-on-one coaching call could be 1.5 to 2 hours, same way as like a live stream. I will go over everything in detail on how I trade, what I trade, why I trade, my risk management plan, how discipline, psychology, everything. Complete sauce. And you don't gotta pay nothing. I pick one random person. The way I pick out of the people that vote yes, based off of how much you engage and how often I see your name engaged in chat. And that way I'm making sure I'm picking somebody that's actually want to learn, not somebody that's just bullshitting or half-assing the trading industry. I don't want to waste my time trying to work with somebody that I know is not consistently coming into live streams, asking questions, and actually trying to take value. So I pick people based off of how much I see their names. Does P&O, the PMI method work for getting funded? I've never tried it. I don't know what the PMI method is, bro. I think to get funded, you just got to be good at managing risk. That's all that is. A lot of people try to go take a funded account and get access to more capital when they can't even manage a $200 account. Wait, is my music too loud? A lot of people trying to get access to 50K accounts when they can't even manage $100 of their own money. Like, if you think about it like this, as an investor, right? Well, not as an investor, as the person that's people are looking for you to invest, right? If somebody comes to you and asks you, can they trade with your money? And you ask them, well, how do you do with your own money? And then they tell you they can't even not blow $100 account with their own money. Why the fuck would you let them trade $100,000 of your money? That don't make no damn sense. I see so many people blowing their own accounts trying to get funding. Like, bro, you can't manage $200. How do you expect to know how to manage 100K or 50K or even 10K? And you can't even manage your own. You can't even manage $20. Don't make sense. So it's important to learn how to manage smaller amounts of money first. That way, when it comes to managing bigger amounts of money, it's a lot easier because you know you could do it with smaller amounts, which is a lot harder to do. So when it comes to passive funded accounts, just good way managing your own money first. Then once you prove to yourself that you can manage your own money without blowing the account and still make consistent gains, then you go the funding route. Other than that, you shouldn't be buying funded accounts. Again, the funding companies are all making money off of the people that fail as a trader. So do you want to be my liquidity? Like, do you want to go buy a challenge and then I request a payout and then they take the money that you just paid and send that shit to me because you just blew the account? If you don't want that to be you, then you should only be buying accounts if you know what you have. If you know that for a fact you have what it takes to pass the challenge, that means treating your personal account as if it was a challenge. Meaning practice proper risk management, have a set proper target by the end of the month or whatever the case may be, like 10%. I'm using Webull and I just started. That's good, bro. Webull is beginner friendly. What's a funded account, sir? Funded account is just getting access to more money and using other people's money to leverage to scale capital. So if I know what I'm doing, I'm a seasoned trader, but I just lack capital or I lack money to actually trade with, I will go to a company. They will put me through an evaluation phase to see if I have what it takes to be a trader. Meaning that they give me a set of rules to follow. I will have to follow those rules and pass the evaluation phase. Once I pass the evaluation phase, things of that nature, they will give me access to a 50K account or a 100K account, which means I have 100K of buying power in the market, and I would treat that as if it was my own account. Whatever profits I make on that account, they will pay me out 80% or 90% of the profit split, depending on whatever prop firm that is. And then I get that way I could scale my personal funds faster that way because I don't have that 100K capital. But it only works for the people that know what they're doing. For the people that don't know what they're doing, or for new traders, don't really work for you because you're just going to be getting cooked the whole time. Is it a scam when a live trader tries to get you to sign up under their broker? No, it's not a scam, but they do make commissions off of you. How long does it take to pass those prop firm accounts? For me, it took me it depends, about 3 weeks to a month, depending on how my trading is going during that time frame. And maybe it may take me, about a month. So it's just situational. Based off of how I trade and how patient I am and with my risk management, I think about a month. I know people that can pass them in a day, in a week. I know people that pass them in 2 weeks. 2 weeks. I've passed accounts in 2 weeks and I've passed accounts in a week. So it's just situational for how my trading is going during that time. But on average, I'm not going to tell you it's going to take me a week. In reality, that's not the average. Like, that's my fastest, but it's not my average. My average, I take me about a month. Makes sense. So it's just increasing your gains risk by using other person's money and split. Yes, but there is a catch. They don't make money off of the trades that you take. Once you get funded, they don't make money off of the trades you take. Because in reality, they're not even actually listing your trades in the actual live markets. They make money off of the failed traders that's going by their challenges and not passing, not even making it to the funding phase. Because they have rules and stuff you have to follow before you can actually get the funding. If you breach the rules, you don't get the funding. But you have to pay to play. If I'm looking for 100K in funding, it's going to cost me $700, $600 just to take the phase challenges. And if I pass, I don't get my $600. If I fail, I don't get my $600 back. And I will pay it again until I pass. So in order to get access to this funding, you got to pay to play. So if you pay and you pass, then you get the withdrawals. If you pay and you fail, you don't get your money back. And they make money off of the hundreds of thousands of people that's paying and not knowing how to play, and they just blowing their money, and they keep buying. So they're making money off of the failing traders, not the actual trade that you're taking. 1. What's a good number of prop firms to have to flip a profit? 1. All you need is 1 prop firm, bro. To be honest. Just need a good size. What's this $50 broker account these people talking about? I don't know. $50 broker. So, and Webull is a brokerage. There are other brokerages like Robinhood, Coinbase, whatever, where you could use that as a middleman to allocate your trades, things of that nature. But in the Forex space or the future space, they have different brokers as well. So in the Forex space, a lot of people use for the regulated brokers, you have stuff like Owanda, Forex.com, FXTM, things of that nature. In the unregulated space, you have a lot of other stuff going on. To somebody that said, is it a scam for the people that's going live and promoting brokerages? No, it's not a scam, but the people that are, well, actually it could be a scam. So I'm not gonna say it's not a scam. It could be a scam depending on that brokerage, right? But they do make money off of the people that are signing up with their link and they are blowing money because brokerages make money. Offshore brokerages make money off of the failing traders just as well as prop firms make money off of the failing traders. There are two types of trades, right? You have one, what we call it. Okay, I'm about to give y'all some real fucking game right here. You're not gonna hear nobody else on TikTok live talk like this. This is how much game I'm about to give you. Okay? Because a lot of people that's on TikTok live don't even know what's going on in the back end of brokerages and back in the prop firms. Okay? So listen closely when I say this. There are two types of trades. You have A booking and B booking. You don't control whether you're getting A booked or B booked. I'm telling you this right now. A booking just means your trades are actually getting live entered into the market, meaning you are actually live real liquidity. Your orders are actually getting filled in these live markets. B booking just means your trades are not getting actively entered into live markets, but you are seeing the real price action. So you're seeing the real data based off of the numbers that you see here on the right hand side, but you are not actually, once you press buy or sell, your money is not actually getting sent as an actual order to that market. Okay? Just because you have a live account with $100 in a brokerage doesn't mean you're getting a booked, or doesn't mean your $100 is getting filled into the live markets. Same thing with prop firms. Just because you passed the eval phase or a top step account or a phase 1 and a phase 2 of a prop firm account doesn't mean you are getting filled in those live markets. Just because it says funded don't mean you are getting a booked. Most of these brokerages in our prop firms are be booking you no matter what. Just because more than 90% of traders fail, they are big booking damn near everybody. Top Step came out and made it public that they only A book their traders, their funded traders, after they make 2 consecutive payouts. So even after you get funded and they pay out the first time, they still not A booking your trades. You get a payout the second time, they still not A booking trades. The third payout is when they start allocating your trades into the live market and giving you to a live actual account that's linked to their actual funds. So with that being said, these brokerages are not A booking you. So even if your account says live, your shit still not getting put inside the real liquidity. No, they're not protecting you by using B booking, because the money that you lose when they B booking your trades, they keep, because they make money off of your losses. So they're not protecting you. So if you take a trade and you lose $100, right, on a trade, and the trade that you take at $100 loss, right, that trade was never even entered into the real liquidity. So when you took that $100 loss, they kept that money in their own pocket. But say you went and took a $100 win, they still didn't implement your trades into the real live market, and that $100 you won, they're paying you out of their own pocket. But because more than 90% of traders fail, they fade their traders. Yeah, so the broker is just the middleman that's actually sending the orders out, and they fade their traders. So because of 90% of traders fails, as the broker, if I know 90% of my customer is failing, I'm going to just do opposite of what they doing, and I'm going to make money. So if I have 90 people, I have a bunch of people working, like operating under me, and all of them is taking buys. Knowing that most of them fail, I'm just going to sell every time they buy. And when they lose, I win. Like, that's literally just how it works. They just fade everybody. The brokerages just fade most of their customers. Especially the ones that's just blowing accounts, making deposit, They see you. They check all that on the back end, and they fade your shit every single time. Start with paper trading, then start with $100. Yes, paper trading is good. So they look protecting. So no, they're not protecting. So I see the minimum. Yes, the minimum. Why do 90% of traders fail when it's so many people claiming profit? Because many people that's claiming profit is the people that's selling shit. Means there's a lot of traders. So 10% of 100K is 10K. So exactly, And inside that 90% total, that includes everybody that's not consistent as well. So that's not just the consistent traders, that is inconsistent traders. So if I tell my sister to get into trading, she opened up a brokerage account and places a trade on Euro USD, loses $1 and never trades again, she is still considered in that 90%. So anybody that plays one given trade is a part of 90% percentile. That's not just the consistent traders, that is the inconsistent traders as well. Meaning the people that's taking one that ever took a trade, you are part of 90%. That's why the total is so high. And if y'all think I'm lying about A booking and B booking, we can look it up right now. Actually, that way I can show y'all. That way y'all know that I'm not just saying bullshit. I'm giving you the real facts. What's the difference? This is ChatGPT between A booking and B booking and trading. Good question. When it comes to A booking concept, STM ECM model, traders are passed straight through processing to the interbank market or liquidity providers. Brokers provide a act as a middleman, not taking the other side of your trade. Broker profits earns from commissions and spreads, not from the client's losses. Risk, broker doesn't carry market risk because traders are offset in the internal market. Trader impact, usually tighter spreads, sometimes with commissions. No conflict of interest. Your profit loss doesn't affect your broker directly. Execution may be slightly slower depending on liquidity. Versus B booking. B booking market maker model, execution, broker takes the other side of your trade instead of sending it to the market. So instead of sending your trade to the actual financial market, they take it the opposite. So whenever you buying, the broker is selling. Whenever you selling, the broker is buying. Broker's role effectively acts as a counterparty. They make the market. So they show you the liquidity. They are your service provider when it shows you prices, things of that nature, and they fade your shit. Broker's profit, broker directly profits when clients lose, losses when clients win. So when the client wins, the broker take a loss. When the clients lose, the broker take a win. So whenever 90% of traders fails, that means most of the time they are taking a win. Risk, broker carries the market risk, but statistically, most retail traders lose money. So it's often profitable for the broker because most people lose money. Example, more than 90% of traders fail, they make money. Trader impact, potential for faster execution since traders stay internal, meaning you're not actually getting really entered, so you get filled in a lot faster. Spreads can be wider, meaning you got wider spreads, and slippage requotes and more common because broker may be manipulating the market in the back end, so they give you slippage or give you requotes. That way, they make you lose, which is scammy. A conflict of interest exists. Your win is the broker's loss. So if your win is broker loss, the broker will try to purposely make you lose so that they can win, meaning manipulate the market. So in short, A book equals broker passes trades to real market. B book means broker takes the other side of your trades, meaning B book means broker just fading your shit. So you heard it here from ChatGPT that nothing I just said was bullshit. Buy what? What are you in buy zone, bro? How do I know if I'm being booked or not? You determine that from regulated and unregulated brokers. They may have a most. Okay, I'm gonna tell you this right now. If you are trading with an unregulated broker, most likely they fading your shit. I'm not telling you that they be booking you. I'm not telling you that to discourage you from trading with unregulated brokers because unregulated brokers do give you higher leverage. I trade with unregulated brokers, right? So I'm not saying that to discourage you from trading an unregulated broker because I trade with an unregulated broker, okay? But if the broker is unregulated, they're probably fading. They're probably getting B booked. If the broker is regulated, they're probably A booking you, which means you get tighter leverage and tighter spreads, things of that nature, and slower fills. Also, that broker should have a customer service platform to where you could chat with their fucking customer service and just simply ask the question: are y'all A booking or B booking their customers? And they should answer honestly. I mean, doing B booking not really that crazy because you just need to be profitable, right? Yeah. So I trade with I get B booked. But the point of me telling you that was to show you, like, even if people are trading with funded accounts, they still getting B booked as well. I'm gonna wrap the live up here though. It was a good talking to y'all. Again, if you want to join my free Discord community, just send me a message on TikTok. I'm gonna send you the link to my Discord. I do one-on-one coaching over the weekends. If you want to be a part of the coaching, just vote on a poll when I send a poll out on a Friday, and I will pick one random person based off of how much you engage in live. I live trade every day during London session, maybe 1 a.m. or maybe 3 a.m. depending on what time I start. This live stream was a lot longer than my normally, bro. I normally be off, but 2 hours. I stay for a whole extra hour, bro. Also, if you want to rewatch the past broadcast to see how I went to revisit some of the stuff that I talked about during this whole live, because I think I provided a lot of value during this live stream. Go to the YT, click here where it says live, and you can see all my past broadcasts dating back to 3 years, right? And see how my strategy developed. If you want to binge watch my shit, if you're new, things of that nature, you can just watch my previous lives from yesterday, rewatch the live today if you want to revisit something that I talked about, whatever the case may be. I also do videos when it comes to pre-market analysis, price action, risk management, live trade breakdowns, things of that nature, and I do shorts on YouTube as well, just like I do on TikTok. Other than that, keep in mind, I do have fake Instagrams of me. I don't have Instagram. No, I do not have Instagram. I do have fake Instagrams of me out there. I do have fake TikToks of me out there. I do have fake Discord out there of me as well. Out there of me. I don't sell anything. My fucking allergies is bothering my nose is itching. I don't sell any services. I don't sell mentorship. I don't sell a course. I don't sell anything. I provide a lot of value for free, just because I want to build a good reputation first before I decide to venture off into other stuff. And a lot of my other businesses outside of trading require a lot of attention that I don't have right now to divert into mentoring people. Right. So a lot of my value comes from the live streams and the Discord calls. Other than that, I'm wrapping up here. It's your boy Trader Hog, and I'm about to head out. Dad, you gonna leave after telling us we're getting cooked by brokers? Well, it's cool, bro. Everybody getting cooked by brokers, bro. It's about picking a reliable broker and building a relationship with that broker, right? But if you're profitable and they don't deny your paybook, like, I don't care about getting A B booked. If they A booking me, I'm cool with that. If they be booking me, I'm cool with that too. As long as when I go to my broker and I say request withdraw for X amount of dollars, that withdrawal hit my account within 24 hours, we good. I don't give a fuck if you be book me or A book me, but my money better come from somewhere. But it's your boy Traderholic, and I'm out, chat. Peace.